Hey folks, welcome, good evening. This is on the Money Space. My name is Kalu Aja. On this space, we're talking money, the economy, and of course, personal finance. We are here every week, 7 p.m. West African time, where we talk money. That's what we do here, right? And this week, we're talking about the new NNPC board. Specifically, we're talking around the comments by the new managing director of the NNPC. He basically gave a press conference, I think it was in BBC Hausa, where he said he was going to focus on two key capital projects, two very, very important projects in Nigeria. One is the AKK gas pipeline that's going to take power from the southeast through Ajaokuta all the way to the north. The plan is to take it to Kano, Kaduna. There's a second plan to take it from Kano, Kaduna all the way to, I believe it's Morocco, Algeria. And then there's a final plan to take that pipeline from Algeria into Europe. So it's a long-term plan, but for now, AKK is just to take the oil pipeline from the southeast to Ajaokuta to Kano, Kaduna. That's the first one we want to talk about. The second thing he did speak about was the Kolmani, or should we just call it the frontier oil exploration efforts. So essentially, he was saying that the federal government, the NNPC, they're going to continue those two projects. One, to keep on looking for oil in what we call the frontier basin, right? Which is the north. It includes like even Anambra, that whole middle belt and all that, up north and everything. We're going to keep looking for oil. If you remember, we found oil, I think, in Bauchi. Our experts will talk more about that. So, my guest is Kelvin. And if you guys have been here when Kelvin has been here, we never have enough time with Kelvin because he's very, very technical. He explains these things so well that more questions pop up. I'm not sure we'd have enough time to just allow him to explain to us what's going on, because I have other questions with the whole gas master plan in Nigeria and also the whole oil drill and all that. But I want to just focus on, like we said, on the header here, just the AKK and of course the frontier drill. That's really what I want them to just drill, take us down really on it and just let us have a better sense of what's going on in that field. So again, guys, this week our episode is brought to us by PalmPay. I was very surprised. PalmPay, Africa's fastest growing company. Did you guys know that PalmPay is the second fastest growing company in all of Africa? PalmPay in Nigeria is the fastest in the financial services sector, but all across Africa, second fastest. This is by a poll by Financial Times. I didn't know this. I did a tweet, and almost everyone is using PalmPay. How come I don't use PalmPay? But it's fantastic that they've done not very young company, but growing so fast. So congrats to them. They're the ones sponsoring this particular episode. Kelvin, welcome to the space, sir. Kelvin, just again for those that are just joining in, just do a quick intro. Let's just get right into it, sir. Kelvin, you've got the mic. If you're speaking, you're not muted, but I can't hear you. Okay. Let me send him a message. If in case he's speaking, can anybody, if you can, okay. Oh yeah, Kevin, you're back on mute, and you think you're now a listener. So he's dropped off. Yeah. So guys, he's gonna join back up pretty soon. So guys, I don't know if you guys had that interview. My own take around that is, and I don't want to bias what the guest is going to say. But
can you hear me now?
Now I can hear you, sir. Now I can hear you.
Okay.
How are you doing, sir?
I'm very well, thank you. What about yourself?
I'm doing very well. It's a great Sunday. Folks are here, want to learn, It's a very, very technical subject, so I'm here as a student. I want to take us through, right? So, Captain, I'm sure you heard the NNPC MD talk around the BBC House interview that was going to focus on the frontier oil drilling and also the AKK. So which one do you want us to take first?
So I was just going to talk about the frontier basins. About 6 basins, inland basins in Nigeria, to give us perspective on them.
Okay.
and then we'll dovetail to gas, and then we'll take it off from there.
That works for me. So, I mean, he's saying that we want to spend more money to find crude oil in the north, right? I did a paper, or I did first researched last week. The number I saw was 3 billion. This is before this statement, before even Buhari. 3 billion already spent to find crude oil in the north. This is before Buhari did the Bauchi one. So, is there oil in the north? Is this a good investment for Nigeria to increase our revenue, our crude oil reserves by looking for oil in this basin? Niger has oil. Chad has oil. I think Cameroon has oil. I'm not sure. But are we in the right spot? Is this what we should be doing?
So, Carlo, I'll tell you what. First of all, thank you so much for the privilege. Thank you for being a great host. It's always a pleasure to join these spaces. Always a pleasure. And I mean that. There are 6 basins in Nigeria, 6 of them. And, you said something. You said, well, Shell is not there. That says a lot. Look, folks don't realize that the reason why Shell, SNEPCO, drilled 30,000 meters and was because it was agreed in the fiscal times for what they call PSC 93, production sharing contracts, that IBB gave out about 80 oil blocks to different companies and individuals in 1993 when he was president, military government, was that they were going to actually explore the frontier basins. So before 2021, when the PIA was signed, the frontier basin didn't have an exploration fund. From like the sector, a formal exploration fund where 30% of profit oil goes to the Frontier Basin Exploration Fund managed by Frontier Investment Services. It's an arm of NNPC Group, that is supposed to explore the 6 basins. So you have one, the Chad Basin. Chad Basin is divided into 2. So the Chad Basin, the upper basin, it belongs to Chad, that Lake Chad. And Lake Chad does anywhere around 100,000 barrels of crude. They export their crude through a Chinese pipeline, about nearly 2,000 kilometers, 1,950 kilometers, that runs all the way from that Lake Chad all the way through Niger down to Benin Republic, to Semen, to the ports, and then take out crude out of the coast. You have the Sokoto Basin. You have the Upper Benue Basin, which is your Bauchi, Gombe. Then you have the Lower Benue Basin, which is your Anambra Basin, your Lower Benue Trough. You have your Bakiliki Belt. You have your Onitsha Basin. You have the Dahomey Basin. Okay? Then you have the Bida Basin. The Bida Basin is divided into the upper and the lower. The upper basin is your Kudu. The lower is your Ahoko. The Ahoko Basin falls into southern Nigeria, and the upper Kudu falls into northern Nigeria. So these are the 6 major basins. Your Dahomey Basin in the southwest is divided by the Okotopipo River in Ondo State that extends all the way. This river and tributaries, they come all the way from southwestern Ghana to Togo to Benin Republic, and then it cuts into southwestern Nigeria.
Yeah.
So these are the 6 major basins you have. But I'll tell you what. I listened to the gist. When we started this conversation like a week ago, I listened to the gist. Folks say this, that we can't know, blah blah blah. If they have more gas than oil, and all of that. It's not fair that we're saying these things. And I'll tell you a basic explanation why I believe, in my view, that other than your Dahomey, okay, in fact, the structure of the rock that has been found from what they call core samples actually shows that the Dahomey Basin has more gas than oil.
Dahomey is this just to be clear, the Bauchi side is what? What's the Bauchi side? The
The
Bauchi.
Dahomey is the one that runs from southwestern Ghana through Togo, through Benin Republic into southwestern Nigeria. You know, it's divided from the Niger Delta by the Okitipupa River. There's a place called Okitipupa in Ondo State. Yeah? And the grade of crude in Dahomey, the viscosity is actually lower than the normal grade of sweet crude that you find in the Niger Delta that is light crude and that has more transportation fuels than non-transportation fuels. Okay, 80% transportation fuels, 20% non-transportation fuels. So the density is actually higher. Okay, but I'll tell you what, Carlo, simple explanation that anyone who is listening on this call who is an oil and gas expert can agree with. You see, when you do seismic to determine if an area has hydrocarbons, and there are indications that it has, they do what they call the exploratory drilling. Okay? There are 3 stages of drilling. They do exploratory drilling, they do appraisal drilling, and then they do development drilling. So, in your exploratory drilling, they usually take what they call core samples. You have your well logs, and then you have your seismic data. And they take these core samples, and when you drill a well, you have the logs from the drilling. And then your seismic data that is used for drilling. They take it to do what they call reservoir modeling. The reservoir modeling is what will tell you if your recovery ratio. The recovery ratio is typically your enterprise value divided by your 2P reserves, your proven reserves, and your probable reserves. For oil, it shouldn't be less than 20. For gas, it shouldn't be less than 80. Okay? So that reservoir modeling would give you an estimate, not accurate, an estimate of how much oil and gas you have.
If it's viable, more or less.
If it's viable, if it's a commercial concern, if it's commercially viable to, proceed to appraisal drilling, you drill more wells and you do a final estimate of the number of wells in a field, right?
Gotcha.
And you pull up all this data. And then after your appraisal drilling of appraisal wells, you now go on to what they call development drilling, which inches you towards first oil. Now, Carlo, how long have we been hearing about Kolmani in Gombe, Bauchi? That place, Kolmani, is actually in Bauchi. So the border dispute between Gombe and Bauchi favors Bauchi more than it favors Gombe. So if you get the Boundary Commission to come and do their technical work, Kolmani will fall more in Bauchi than Gombe. But the community, there is a clash between them because of the rumor, So that's what you call your upper Benue. It's actually Gongola Basin. But, after Nigeria, the government created more states, and Gongola was divided into a few states, right? So your upper Benue throw, right? If you actually have commercial quantities of crude oil within the space of the last maybe 4 years, right? They should have hit first oil. Because for onshore acreages, it shouldn't typically take you more than 24 months to hit development drilling.
You're saying this is so you're saying Kolmani should have hit oil by now?
It should have hit first oil by now.
Apart from... Okay, go ahead.
Carlo, remember that for Bonga North is part of the Bonga family in Delta State. Bonga North, you have Bonga Main, you have Bonga Southwest. Maybe I've forgotten the fourth one, but the Bonga family. The recent one Shell commissioned FID on for $5 billion, which has an estimated ultimate recovery of 300 million barrels of crude over a 10-year period from 2029, 2030 to 2040. So they're going to start and then hit peak at 2032, and then the well will start maturing and start depleting by 2036, 2035, 2036, And, their fiscal modeling, reservoir modeling will determine how they proceed from there. For Bonga North, imagine deep water assets that you have drilling of anywhere between 4,000 and 6,000 meters in deep water, not in a frontier basin. In deep water, Carlo, not on land. They are going to hit first oil in 4 to 5 years. Does it make sense that within the last 3 to 4 years, these basins I've mentioned to you have not been able to hit development drilling, past development drilling, and hit first oil?
Have they been drilling? Have they been drilling since Buhari left? Because
I'm not going to mention any names, but one company was given a contract for $300 million for coal mining from the Frontier Basin Exploration Fund. As a matter of fact, a little bird told me that last week, one of the anti-corruption agencies raided the offices of the arm that is awarding contracts to collect documents and to see how these monies have been allocated and spent. Another company was given contract of $45 million for drilling, exploratory drilling, for one of the assets within the North Central. So, explain to me, Carlo, that nearly $3 billion has been appropriated for, frontier basins in 3 different basins. In the, the Chad Basin, in the Bida Basin. No, I wouldn't say Nasarawa is in the Bida Basin. I don't think Nasarawa is in the Bida Basin. And in the Upper Benue Trough. And they've not hit first oil.
I hear where you're going to with this. You are saying that, in fact, what you're just trying to say is that we've been drilling and we haven't found oil. So,
Carlo, it's been 3 to 4 years.
What about the one in Bauchi when he was leaving? And I want to be very, very clear here. What did they find in Bauchi? Was that real oil? Because I saw the picture, the oil head. What was that?
Carlo, look, if you find oil, you pass development drilling, you should start production. Because one company that manages one of the FTSAs for NEPL was actually giving contract of $300 million.
Okay.
They should have hit first oil by now. So the question is, why is Bauchi and Gombe, depending on how the National Boundary Commission partitions that particular field, not classified under 13% derivation of oil-producing states, even if they say is a state that doesn't hit the materiality threshold?
Because Lagos State is also getting 13%, and they don't have that much oil, right? But they are now an oil-producing state, Lagos State.
Lagos State, yes, but OML 113 that is giving Lagos 13% derivation has actually not been active for a little while.
No, the
because
point
that block actually has more gas than oil.
Yeah, the point I make is that Lagos is with a small oil is a 13% state, and that's what you're saying,
Yes.
that Bauchi that has the quote unquote oil hasn't been added. Anambra is a 30% state already. They don't make, so just this state. Okay, I hear you. So, I mean, the question is now, do you think it's because if you float it, we had a big Twitter back and forth. Do you think it's viable? Because in economics, it's one thing for something to be viable economically today and something to be viable economically tomorrow. Do you think it's a viable venture to deploy dollars to find oil? Remember, we just found oil off Somalia. Massive find of Somalia. Nobody was looking there. Turkey invested money. Now it's 20 billion barrels. Kenya they found oil. Off Madagascar, Mozambique, they found oil. So is it worthwhile for us to actually look for oil? Because there might be oil there, really.
Carlo, I'll tell you that one of the reasons why the operators have not been very keen about coming into frontier acreages, especially in the Bida Basin, upper Bida Basin, by the way, the Kudu side of the Bida Basin, the former Gongola, upper Benue Trough, the Chad Basin, is because these areas actually has more commercial deposits of gas than they have oil.
Okay.
And in 1999, when SNEPCO is the offshore arm of Shell, when they agreed to the PSC 93 times, to come into inland and check, and drill 30,000 meters and find 33 billion scuff of gas. Gas wasn't really like in the picture. Because 1999 was around the same time when the train 1 to 3, if I'm not mistaken, was kicking off for NLNG. And gas wasn't really what had always been in the picture, from when the government found crude oil in Loiberi and then the heat first oil and the joint OPEC was oil. The whole thing about the commercial use of LNG and separation of gas to methane, to ethane, to propane, to butane. So you have your propane and butane used for LPG, industrial and domestic use. Then you have LNG that is liquefied. Methane gas is liquefied into LNG or is piped as methane. It wasn't really so much of a commercial going concern as it is today.
Okay. So the business case for drilling non-associated gas fields that has more commercial deposits of gas than they have oil, depends on the fiscal terms in the petroleum fiscal modeling that the government puts in front of the operators. So, for Qatar is number 3, US is number 1 for LNG, Australia is number 2, Qatar is number 3. I think Algeria is somewhere around number 5 or number 6. If I'm not mistaken, Russia should be number 4. Qatar's strategy has shifted to gas. In 2019, Qatar left OPEC. Qatar doesn't do more than 1.2 million barrels of crude. But you can imagine the amount of gas Qatar has that is making it to now produce anywhere around 100 to 110 million metric tons of LNG per year, when Nigeria is struggling to do 20 million metric tons of LNG per year. Okay, the focus for Qatar has always been on non-associated gas that is drilled, gas that is trapped from drilling gas, not from drilling crude and trapping gas. If you understand what I mean. So the business case for gas, right, is different from the business case for oil, given that Nigeria has more proven reserves of non-associated gas than it has associated gas, which means typically that the gas that are proven, 210 trillion cubic feet, 53% of it is gas that you have to get by drilling for gas, not by drilling for oil and then trapping gas. I see. I got it.
Do you understand what I see?
I see, yes. I got it. So
I don't understand why a section of Nigeria is upset that based on seismic data, based on well logs, based on core samples, it actually shows that you have more gas than oil. Gas is huge. Gas is the future. Gas is transition fuel. Gas is the reason why Qatar is Qatar. Gas is the reason why Qatar wants to give Trump $400 million gift in a jet. Gas is the reason why Qatar is promising America over $500 billion in investments, $500 billion in investment. Gas is the reason. I don't see why people think that gas is less than oil.
Okay, so is it the same assets? Can Colomari just say, okay, we're looking for non-associated gas today, we're just going to leave oil and do you just transit over, or you need a new equipment? Is it like just I want to eat bread, I want to eat meat pie? Is it the same thing like that, or how does it work?
So, look, for gas, I wouldn't say it's that different, because when you drill for gas, you trap the gas, you have to aggregate the gas, and then from the flow stations, you send it to your, what's it called now, your designated nodes to calibrate the pressure. From designated nodes, it goes to central processing facility where it's treated. It comes in as wet gas. It's treated, and then it becomes lean gas, separated into methane, into ethane, propane, butane, and then your family of gases, but the major ones are your C1 to C4 to C5, the commercial case for gas is a little bit different from the commercial case for oil. But typically what you have, and the reason why, Carlo, NLNG, for example, one of the reasons why it has shortage of gas feedstock and is currently anywhere below 60% capacity utilization is because most of the crude oil, so most of the gas used in Nigeria, say 80% of it, 85% of it, is actually associated gas they get from crude oil. Like when you drill crude, you trap gas. Nigeria has not really, the government has not developed fiscal terms in that petroleum fiscal modeling regime that is attractive enough for the operators to invest in gas as a separate, independent commercial venture and not drill for oil and trap gas.
So, I still want to find out from you, right? What you're saying now, I don't think is a state secret. The NNPC knows that there's gas in Nigeria, right? People know there's gas in Nigeria. I'm just wondering why are we looking for, if you say there's no oil and is the gas proven it's there? We know it's there, correct? Why don't we just go get the gas and become a Qatar? Why can't Bauchi just become Qatar today?
Because, we've not adjusted our, I'll say the government doesn't really have an oil and gas strategy. The focus right now is just, get crude oil output to, when the president talks about the budget and assumptions, he's talking about crude. You don't see him mentioning gas. Carlo, have you ever heard the president mention gas?
Not really.
Say the target for gas, the output for gas, because most when they are doing budget, they are always on the assumption of, every 1 barrel of crude gives you 6,000 standard cubic feet of gas. So if you do 1.5 million barrels of crude, for example, let me just quickly do some numbers. 1.5 million times 6,000. That is about 9 billion scoff of gas, depending on how much you trap, how much you flare, and all of that stuff. That's 9 billion scoff of gas. Okay? If you divide 9 billion scoff by 45,000, you get anywhere around 200,000 tons of LNG. There are metric tons of LNG, I think, if I'm not mistaken. 9 billion scoff of gas. A portion of it goes into the domestic market, a portion of it goes into the export markets. Willing producers' price path, The focus has always been on oil. And then they're like, okay, whatever comes from oil as gas, you take it.
Okay.
The focus is not on gas because the government has not defined a strategy on how to make Nigeria a major gas-producing country and to build diplomacy from gas. The focus has not been on gas. You can imagine when Trump is talking, he's telling you about how, he wants America to become the leading LNG producer in the world. Biden talked about it too. And it was pretty much under the late end of Biden's regime that America went up to about 26 million metric. They went from about 14% to about 26% of the global LNG markets. There is a focus on not just associated gas, about 13.3 million barrels of crude drilled a day in America. There's also a focus on non-associated gas. So they have a strategy. Nigeria does not have a strategy on how to drill for gas as gas and not drill oil and then trap gas and then use the gas it gets to supply the need of gas-based industries, Gencos and all the companies, the ones doing urea and all the other companies, that is in need of gas, and then the export markets. It doesn't have a strategy. So it's like whatever comes from drilling oil is what we'll use for our gas needs.
So essentially, you're saying that there might be gas in, let's just say, Kolmani, for instance, but we have the laws for oil, but not the laws for gas. So
we don't have. If you look at the National Gas Master Plan, so I'll tell you what. The interesting thing. I was just speaking to someone today about the Gas Master Plan and the diagram design for gas pipes in Nigeria. And we're talking about the drawings for gas. You have AKK, you have the pipe from Ajaokuta going to Gwagwalada, from Gwagwalada to Zaria, from Zaria to Funtua, Katsina, then it's on its way to Gasu. And I was mentioning that, look, the Northeast does not actually have a design for gas pipe, okay? Considering that the Northeast has a lot of gas, like underground. It has a lot of gas underground
This is interesting.
That is not coming out. Yes, it doesn't have so
Okay,
AKK,
so this goes to
AKK typically runs from north central to the northwest to Gaosu. And I was wondering why, when the Ministry of Petroleum, first designed the AKK plan, it didn't add northeast in it. So here's what we discovered. We discovered that there was actually a plan from the Ministry of Petroleum to take, and the gas gathering for this AKK actually mostly comes from Niger Delta, okay? It comes from, your northern Obigo to your Obi-Tori link, Obigo to a section of it, to Abia, to Enugu. From Enugu, it goes to Ajaokuta. It crosses the river Niger to Ajaokuta. That's 1.8 kilometers they've not been able to cross until now. They've spent a lot of money on it.
I don't want to. So I want us to get AKK, right? But I just want to nail down for just. Sorry, but I'm getting a lot of DM just to nail down what you're saying, right? So you are saying that the viability for the North is more in terms of gas, not crude oil.
Crude oil.
Just nail that down. Okay, so that goes to my question, i.e. the viability, the long-term viability of looking for gas in the north. Sorry, of looking for crude oil in the north. Why can't they just change that to gas? Is it? I mean, why are we looking for crude oil when, like you said, there's proven gas already? Apart from the laws, is there anything stopping us from getting this gas tomorrow?
Carlo, the reason is because the operators want fields that has more crude oil than gas.
Who is the operator? That's the foreign guys, or like
the IOCs. The IOCs will not even touch the frontier business. They will not touch it. They will not touch it with a 6-foot pole. Especially considering now that they've all divested. Total has divested to Chappal, Mobile, to Seplat.
But Kevin, we know why they left the Niger Delta, but the Northwest, does it still have the same issues with Niger Delta? Why won't they touch it?
Well, Carlo, security is a factor, is a major factor. I mean, look at the whole issues in Nigeria. Security is a major factor. Security is a factor for them in Niger Delta. Security is a major factor in the Northwest. But more important, when I was explaining earlier, I talked about reservoir modeling. Reservoir modeling is what you do from your seismic data, the logs you get from drilling your exploratory wells, and your core samples. Okay? Your reservoir modeling will give you what you call your recovery ratio. Your recovery ratio is derived from your enterprise value divided by your 2P reserves. Recovery, that reservoir modeling will give you that estimate. And in oil and gas, when they are doing reservoir modeling, they usually have recovery ratio at oil must not be less than 20 as a factor, gas must not be less than 80 as a factor. These are unemotional decisions. These are decisions based on hard numbers. If based on an exploratory well, right, they've done reservoir modeling and it doesn't show that recovery factor shows that there's commercial viability in investing in such a project, because it's very expensive to drill and to do field development. It's very expensive. It's very expensive. They are not going to come in. So if, for example, Frontier Investment Services is deploying a section of the Frontier Basin Exploration Fund, which is 30% of profit oil, based on the PIA, right, into developing, going into these basins to see if there's oil, and then when it becomes a commercial concern, they decide and say, okay, they want to give it as an FTSA to a company, or they want to bring it under NEPL, and do service contracts. The question is why are the numbers not showing that it's a commercial going concern and they've hit first oil and there's oil coming out of the ground? It's because they've not found commercial quantities of crude oil that makes a good business case for viability. It's as simple as that.
So I read something that I heard there's probable reserves, there is viable reserves.
There's probable reserves, there's probable reserves, then there's possible reserves.
So in this case,
and
go
your
ahead.
3P. You have your 2P and your 3P. Your 2P is your proven and probable. Your 3P is your proven, probable, and possible reserves.
So in this case, there's a possible chance there's oil, but it's not a proven chance that the oil there is a commercial enough to attract the foreign investment that will then make that place produce oil for export. That's what I'm hearing.
Possible has not moved to proven. Simple.
Simpler. So possible has not moved to proven. That's the okay. And if they did gas today, because you're saying they can't do gas today because the laws are not yet written, so an investor will not come. Is that what I'm hearing you say? Even NNPC, Nigerian Gas Company, can't move in there even without the laws. The Nigerian Gas Company.
The Nigerian government has to decide its strategy. Like I said earlier, the Nigerian government does not have a strategy for gas. If you look at the National Gas Master Plan, document, in my opinion, is empty. It's not detailed.
Okay, so this is crazy. Okay, so why is the NNPC?
And I'll tell you why I said it's empty. I gave an example. Qatar left OPEC in 2019. Qatar does not produce more than 1.2 million barrels of crude. Typically, 1.2 million barrels of crude will give you about 7.2 billion scoff of gas, standard cubic feet of gas on a daily basis.
Yeah.
That is maybe twice of what NLNG needs on a daily basis today to be able to achieve 22 million metric tons per year. That's like twice. Okay? But NLNG is like a sixth of the size of Qatar LNG. NLNG is a sixth in terms of their output. Sixth. So divide 100 by 6. NLNG is a sixth of Qatar LNG. Yeah? So if Qatar is doing 300,000 barrels less than Nigeria is doing in crude oil, but it's producing more non-associated gas, which is gas you get from drilling for gas and not for oil and trapping gas. How come Qatar LNG is 6 times bigger than NLNG?
They've invested more.
Are you seeing my point?
Yeah, I see where you're going. But again, we had the NNPC guy is not a new guy to the industry. He knows what you're saying, but he's saying he wants to pursue oil, not gas.
Well, Ojulari started his career in the 90s. He's been in the business for a little more than 30 years. I have respect for him. But I will say very respectfully to him that considering that his former employer, left the upper Benue Trade, Gongola Basin, drilled 30,000 meters, found 3 billion scoff of gas in one well, and abandoned it and left because, number one, gas was not a commercial going concern as at then. But did not bother to explore further. It's a good reason for him. And considering also what I've explained about reservoir modeling from exploratory drilling, and the fact that it's not really moved to appraisal drilling. Because if you do exploratory drilling and you come out with your reservoir models and you get your what you call your estimated ultimate recovery. Estimated ultimate recovery is the total amount of crude. So for example, just look at even before Shell started drilling for exploratory drilling. Okay, they've appointed Schlumberger, if I'm not mistaken. I think it's Schlumberger they gave that. Is that Schlumberger or Saipem? I've forgotten the name of the company, but they gave 2 companies contract for Bonga North. Before they started exploratory drilling on Bonga North, before Shell is able to get your the logs from drilling wells, they're going to drill 8 wells for crude, 8 wells for water. They'll do a tieback, which means for the 8 different wells, they will tie. They'll use pipes, tie the pipes to one riser and not do FPSO for each well. connect to one riser, and then connect to FPSO. It's like a cost-saving strategy, okay, within a 100-meter radius, the distance within which the wells in deep water will be located, okay? Before their EPC contractors have come in to start exploratory drilling, Shell has already come out to tell you that they've done their numbers, they've gotten their recovery factor, and the estimated ultimate recovery for Bunga North is 300 million barrels over a 10-year period from 2030 to 2040. They've given you the numbers already. And they've said that they've achieved what they call a hurdle rate. And the hurdle rate, is above industry average, which means that it's a green light. The commission FID based on that. In fact, it was based on the fact that they got an internal rate of return, a hurdle rate that is above market average, that they commissioned the green light and the FID the project. If Shell and its partners have already given you the estimated ultimate recovery before drilling the first exploratory well, tell me how come, Kalu, how come for the frontier basins in Nigeria, specifically the one in Bauchi, NNPC and its contractors have not been able to give you the estimated ultimate recovery or tell you how much reserves are there. So if, for example, now they are claiming that, okay, we started exploratory drilling, well, based on the seismic data you've recovered, based on the logs from drilling the well, based on the samples you've gotten from drilling, you've even gone a step further than Shell, because Shell has not even done all this. And they're giving you the total amount of crude they're expecting over a 10-year period. Why are you still not able to give us the estimated ultimate recovery? These are like anybody on this space who is an oil and gas person, upstream, exploration and production, E&P, that knows its onions, should attest to every single thing I've said. And if I am saying nonsense, when you start question and answer session, of course, the floor is open.
Okay, let me just give you the final pushback. The former press secretary to the Mr. President Buhari, Bashir, he told me that they will need more refineries in the north, because this is his words, the oil, they're going to find more oil pretty soon. And I also had a back and forth with a gentleman as well. And so essentially they are saying that, how can I put this? If the Oyibos will not come, because for them, they are easily scared away. When we wanted to do steel, they did not come till we paid them. Whenever you call the Oyibos, they look at the money side of it. I'm just saying, sir, the NNPC doesn't have that issue. They would come and develop what is not developable today, but tomorrow it becomes commercially. So are you saying that even if because of patriotism that we would even take a marginal loss, are you saying to even go to the north and develop that gas for the sake of Nigeria? It is not even if we don't break even, but we just lose maybe 10%. It's not a viable venture. It's just to get you on record that it's not even something we should pursue EBITDA wise, break even wise, IRR wise. Just to be clear, that's what you're saying.
Carlo, if the government had a gas strategy, it will incentivize the development of non-associated gas fields in the north, which is gas that is produced independently without drilling oil and trapping gas. Okay? For example, if you had a gas strategy and you focus on NAG, there will not be a need to aggregate gas from Niger Delta all the way to the north. There won't be a need, because you can easily use the gas that you get from Bauchi to feed to AKK. You can also use the gas you get from the Chad Basin in Borno and feed down into any phase 2 of AKK that will go from Tua or Kano or Zaria and run all the way Bauchi through Gombe to Adamawa and then Maiduguri.
Okay.
With PMRS in each state. Okay? And then you can also, basically like extend that pipe, that AKK pipe, through TNGP, Transnational Gas Pipeline, depending on problematic situation between Nigeria and the Nigeria Republic, all the way to Algeria. But we don't have a gas strategy.
Amazing.
Our focus is on oil. So there isn't a case of, okay, even if the North has more gold, raw gold, than every other part of Nigeria, in Sokoto, in Zamfara, in some parts of Nasarawa, I even hear rumors that there's gold in some parts of Abuja, and Plateau. Why have we not been able to develop like a solid minerals regulatory framework that is as sophisticated as what you have for oil and gas? So you have a situation where the South is coming with oil and gas, the North is coming with gold, and the North has commercial deposits of gas. The gas it produces feeds into the domestic gas delivery obligations, and then it feeds into an export framework. Carlo, you can't make commercial decisions based on patriotism.
Okay.
If the numbers don't make sense, they don't make sense. There's no tribal religion inside.
Okay. All right. Let's move, Kevin, quickly to the AKK. AKK is the pipeline going south-south, southeast, Ajaokuta, Kano, Kaduna. The NNPC CEO said it's going to be a focus. Where are we? What do we need to do? Is it a question of no money or no technical ability? If you could take it from there.
So, AKK was initially designed by the Ministry of Petroleum. The Ministry of Petroleum came out with the engineering design for AKK. Abuja, Kaduna, Kano, and typically it's 614 kilometers running from Ajaokuta, Abuja, Kaduna, Kano, 614 kilometers. Typically, globally, Kalo, the price of developing 1 kilometer of gas pipeline, because they use carbon steel pipes, ranges from $650,000 to about $1.5 million. The Russians and the Chinese, they built Gazprom. I think Gazprom partnered with this Sinop or Sinopec or CNPC. I've forgotten the particular state-owned enterprise in China that had that deal with Gazprom. They built a 4,800, 4,900 kilometer export pipeline from Russia that they call the Power of Siberia, all the way through Mongolia. Mongolia is the right of way to China. They built an export pipeline. You know how difficult that terrain is, Carlo. It's a very difficult terrain. They built an export pipeline. And the average cost per kilometer was anywhere between $1.2 and $1.5 million per kilometer. Carlo, in Nigeria, the cost per kilometer of AKK, which is a project within Nigeria, is $3.2 million per kilometer.
Hey, we have to buy KK now.
So that is basically $2 billion divided by 614 kilometers. Basic numbers.
Wow.
$2 billion divided by 614 kilometers. $3.2 million per kilometer.
Okay. So that's why the Chinese left. The Chinese left because they said the pricing, it was over bloated.
They've done these projects. They've done it around the world. It doesn't make sense. In fact, the Chinese built a pipe 1,950 kilometers from their garden fields in Niger Republic. They built it all the way to Benin, to Seme in Benin Republic. Go and meet the Chinese to tell you how much it costs for them to build 1 kilometer of that 1,950. By the way, Carlo, 1,950 is nearly 3 times, or is even more than 3 times 614 kilometers. Let the Chinese tell you how much it costs them per kilometer to build that pipeline from a garden field to Seme in Benin Republic.
And they went round. They didn't go bird's eye. They went round. They didn't go to Nigeria. They went round through Benin. So it was longer.
It was longer. They went round. So how? So it doesn't make sense to me. It doesn't make sense that they commissioned a project for $3.2 million, which is more than 100% of what it costs to build pipes anywhere in the world. Export pipes, by the way. Okay. And then they'll come back to you and tell you that, they want to do contract variation costs because the money is not enough.
Okay. So first of all, it was overpriced. Then the NNPC took over the contract. Mele said they've taken over. He had paid $1.1 billion to, I think it was Oil Serve and somebody else that is doing the contract, the piping now. So where are we now? Last time you were here, you said they couldn't cross the river Benue or something like that. Where are we now on AKK? I also saw a report, they said 72% complete.
So the River Niger crossing is from Enugu to Ajaokuta. Because if you check the map, Carlo, you know that Enugu, it just connects immediately to, on one side to Benue, and then on the other side to Kogi. Yeah? And that River Niger connects it directly to Kogi, to Ajaokuta. So where they are now is from Enugu to Ajaokuta, and that pipe is 1.8 kilometers across River Niger. That pipe has to cross River Niger. Okay? And that is for gas gathering. Because that is the gas that you're gathering to the confluence center, which is Ajaokuta, that takes the gas from the starting point. Ajaokuta is the feed for the confluence point. That's one side of the problem. The other side of the problem, Ajaokuta to Abuja is done. Kanu to Funtua, I think, is ongoing. Sorry, Zaria to Kanu, I think they've almost completed it. Where they are now is between Abuja and Zaria.
That's what's left.
That's what's left. That's what's left. Then phase 2 will be from Kanu, from Zaria to Funtua, then to Gausu.
So they've almost done it.
That's where they are now. But the problem is, even if you cross River Niger at an inflated cost, very inflated, more than 100%, and then you finish Abuja to Zaria, how are you going to feed the pipe, gather the gas to the confluence point and feed that pipe to ensure that the pressure is high and that there is gas for offtake? Because the gas, one side of it on that OB3 channel is coming from River State, collect from Abia, go through Enugu, and then take to the confluence center in Ajaokuta and Kogi State. Where's the gas?
So the gas we have, the gas we have that I know is going from south through the West African gas pipeline. What about that gas?
No, that is Escravos. That is Chevron. Mostly runs that line. That is completely separate. That's not on the route to
the one that powers Geregu and the rest. That's Chevron. Is that what you say?
No.
Okay, let me pull up my map.
The one from Escravos, Chevron. So they are different pipes. Right? I don't want to confuse our listeners. But so they are different pipes. Okay?
So now there's
the pipe.
Go for it.
There's a pipe that connects from Escravos, and that feeds the pipe that feeds Dangote, Shell, Chevron, pipe that feeds Dangote refinery for urea, that feeds a lot of all those companies, Axela, and them that run distribution pipes. Axela has TNGL, I think. If I'm not mistaken, about 13 kilometers TNGL pipe that distributes gas to off-takers in Ogun State, in Lagos, and then that main trunk line also forms the export framework to you to export gas into what they call the West African Gas Pipeline Company, WACPICO, that runs all the way through Benin Republic, Togo to Ghana, and then, supplies Ghana with the gas it uses for electricity. And NNPC owns about 27.9% of WACPICO. Well, I don't see their financials on their balance sheets. But there are different pipes. There is the OB3. There are different pipes that extends mostly from Delta State, from River State. I think very soon there's going to be a pipe that will go from Bayelsa to the southwest.
Okay, I just shared a photo now from Petroleum Economist about gas pipelines in Nigeria. I don't know if you can see it. I just shared it now. I just put it on that latest share now. I don't know if you can. If we can look at that, can you see it?
Yeah, I can see it.
So is that pipe accurate? Because if you look at it, it's saying that there's something going from maybe Benin or Escravos all the way to Ajaokuta. It's in red, so it just stops there. So is this map accurate?
Yes. So that is OB3.
It goes to Ajaokuta.
That is one area of the feed. Yes, that feeds Ajaokuta. But the other leg of the feed is, so you look at the dotted red lines.
Yeah.
Are you seeing the dotted red lines?
Yes.
Notice it says in the legend, it says gas pipeline planned and proposed.
Yeah.
The dotted red line, the shorter one, is your OB3 that connects from River State, Northern Obigbo, through Umaya to Enugu. And that is the one that is crossing River Niger to Ajaokuta that I've been explaining.
Is that the one? That's AKK. That dotted red line to Enugu to Ajaokuta. That's the AKK.
No. AKK starts from Ajaokuta.
Okay. Oh, I see what you're saying. Okay.
Of that gas that will feed Ajaokuta is what you have Benin, OB3, one, going to Ajaokuta. If you look at the legend, the gas pipeline from Benin says gas pipeline, which means there's an already existing gas pipeline.
Yeah.
Okay? But Benin will not be able to feed Ajaokuta with all the feedstock that he needs. So you see what they have, gas pipeline planned, proposed.
Yeah.
Dotted red lines.
Yeah.
The shorter one is what you have coming from Port Harcourt, Obigbo, to Umaya, to Enugu. And then from Enugu, you cross the River Niger. That dotted line that goes left, red dotted line that goes left, is where we are right now with the 1.8 kilometer pipe that cannot cross River Niger.
Okay, without that, we can't get AKK.
You can't get AKK.
Interesting.
Because there will be no gas to feed, there will be not enough gas to feed AKK. The second one, which is the longer one, is what I was explaining earlier about the northeast not having any planned gas pipeline that comes from Port Harcourt to Umahia to Enugu and then goes all the way to Makurdi. From Makurdi, it goes to Jalingo in Taraba, and then it goes to Biu in Borno State. So Jalingo, you see the dot?
Yeah.
Jalingo, and then to your right, you see Yola.
Yeah.
Yeah?
Yeah.
And then it goes to Biu in Borno State.
And it's going
and then from Biu, it connects back to Bauchi. And then back to Kano.
Yeah, oil.
Are you seeing it?
Yeah.
And then from Kano, it connects out to TNGP. Transnational gas pipeline through Niger Republic to Algeria.
Yeah, see it. I see it.
Are you seeing it?
Yep, I see it.
So what I'm explaining to you, Carlo, I'm saying to you that, listen, if we create a fiscal framework in the petroleum fiscal regime for gas, non-associated gas field, which is gas that you get from drilling for gas, not gas that you get from trapping
crude
gas
oil, yeah.
when you drill crude oil. You can connect those gas fields to the PMRS in Biu from Maiduguri, from the Chad Basin in Borno State. Connect it to Biu. Connect the one in Bauchi, Komani. You can connect Komani to this gas pipeline that will run through Bauchi, which is proposed. Are you with me?
Yeah, I'm looking at it. Yeah, I'm looking at it.
If you explore the Bida Basin, the upper Bida Basin, which is your Kudu, you can connect that gas field in Bida Basin to AKK to feed it with more gas.
Okay.
Hello, are you with me?
No, I'm with you. I'm looking at it. I'm
listening. One in Lafia. You can either connect it to AKK or you connect it to phase 2 of AKK, which is the proposed.
Yeah.
Are you seeing it?
Yep, I see it. So
I don't know if everyone who is listening on this call is actually watching this map and see as how we're explaining this thing.
It's shared on the tray. If you go to the last tweet I posted, that's what we're looking at. So I think Ken, can you see it? Ken, you can see it, right? Ken is the only speaker here. Ken, you can see the map.
Yeah, I can see the map. Yeah.
Yeah. So yeah, it's there. I mean, it's an interesting map because again, since I have you here, Kevin, if you look at the entire southeast, there's no gas infrastructure there. There's no gas pipeline there.
This is the reason why I said, listen, without gas, you can't generate electricity because 75% of the gencos in Nigeria, there are about 26 gencos. 19 of them are thermal-based plants, which means they run on gas. I think you have 2 steamed gas plants. Then you have about maybe 5 hydro, if I'm not mistaken. Maybe 4 or 5 hydro, if I'm not mistaken.
Kainji, 1, 2, 3. Then what's it? There's 3. It's 3.
Okay, 3. So you have 26 gencos in Nigeria. 75% of them, 75 to 80%, they run on gas. So if, for example, the entire southeast and the entire northeast, they don't have a gas pipeline or a proposed gas pipeline, right? How do you expect their gencos to generate electricity? Somebody was mentioning the other day that, you can fall back on Abia and then build transmission lines. I said in 2025, when power has come from exclusive to concurrent legislative list, and NEC has given the states and the regions the power to run the show, you want to build gas power thermal plants in Abia State and then run transmission lines across the southeast. It doesn't make any sense. And if you look at the NEC, their data, you see that even if the southeast has one of the highest level of adoption for prepaid metering and lowest impairment in terms of cost recoveries, they have some of the lowest output for electricity generation in Nigeria. And you can easily see the parallel to the lack of
gas pipeline
running through the southeast.
Okay, so
if you don't have a gas pipeline, an investor will not come in and invest money to build a generating company, a thermal plant to generate electricity. First thing, they will not come in. Why? Because there's no gas pipeline. What do you want them to use?
Okay.
Do you want them to truck LNG and then regasify it?
Okay.
And then generate electricity? At what cost?
And Kevin, since we're here, I want to give the phone over to the guys I want to speak, right? Since you're here, why is power so expensive? Can you explain to me? I saw a report where a hospital spent 20 million naira in 3 months. Togo there's no company in Togo that can afford 20 million naira in 3 months for power. So why is power in Nigeria expensive? We have gas, we have oil. Why is it expensive? If you could just maybe layman, why?
Carlo, those people are on estimated billing.
Yeah, but 20 million.
They're on estimated billing. There's no way they will use prepaid meter that they will spend 20 million in. Is it 3 months? Or
3 months. That's the report. 3 months. 3 weeks.
There's no way they use prepaid meter that will spend 20 million in 3 weeks. It's not possible.
Aso Rock said they got a bill of 47 million or so. You saw that, right? Aso Rock, that they got a bill.
47 billion or 47 million?
Even if it's 47 million. I mean, why is it so expensive?
Meanwhile, in the appropriation document for 2025, it shows that what was actually apportioned for paying of electricity bill in 2025 from State House is actually 311 million naira. 311 million. That's the appropriation.
Okay,
so that 47 billion naira figure was a random. I don't know where that came from.
But Kevin, to the question, why is it expensive? Because even if it's for 3 months or 6 months, 20-something million, like the UCH in Ibadan is short. They don't have power because they couldn't pay some crazy bill. Why is it expensive? Why is it?
Number one is postpaid. It's not prepaid. If you run through a meter, it will be even on band A. Somebody cannot just come and write a crazy bill for you and say, okay, sorry, you have a 6-bedroom duplex. Your house is very big. You have 10 ACs. You drive 4 cars. Your house is very fine. Your bill is 1 million naira every month.
So those guys don't know that if you put up a meter, their price would fall. That the university, UCH doesn't know this. That if they
there's no way you spend 20 million for 3 weeks at a hospital. It's not possible. I don't know the kind of equipment they use at the hospital, but it's not possible to spend 20 million naira in 3 weeks.
I'm going to look. I don't think it was 3 months or 3 weeks. Let me look for the story.
Let me drill into the power sector, because oil and gas is also related to power, because most of the feedstock used for generating electricity is from gas. Okay? So, first of all, gas is not properly priced to the gencos in Nigeria. So, Nigeria's gas pricing falls under what they call the T&T curve. Trinidad and Tobago, Nigeria models its gas pricing along 3 countries, Trinidad and Tobago, Saudi Arabia, and Egypt. And the pricing of gas in Nigeria is a third of the pricing of gas in these countries that they model the gas prices after. So, for example, you see something like under delivery gas, domestic delivery gas obligation, sections 108 of the PIA, and that says a certain portion of gas that is trapped or drilled or comes to surface is supposed to be supplied to the domestic market, compulsory by the government. Government has a national reference code that places a cap on the domestic base price of gas to gas-based industries in Nigeria. Okay? So, to gencos, I think it's about $2.18, if I'm not mistaken. But that price is not aligned to what they call export parity curve. The export parity curve is taking into cognizance that the same gas you're pricing at $2.18 under the export market framework goes to about $6 to $8, $9. Yeah?
Yeah.
Under the export framework, Willing Price Producers Price, they call it WPPP. So, if, for example, you're telling the operators that because the government has placed a cap, it doesn't want electricity prices to go significantly up because if gas prices are up, gencos will increase the price for which they deliver load to the market operator. Market operator will increase the bill of the discos. The operators are looking at it and saying, okay, so and we have to invest in infrastructure. Okay. So we'd rather just reinject the gas or flare it. If you flare it, we pay fines. Yeah? Then, because the business case for trapping the gas and then aggregating the gas to flow stations. From flow stations, it goes to designated nodes where they calibrate pressure. Then it goes to central processing facilities where, as a wet gas, it's treated and separated into C1 to C4 and the family of gases. All these processes involves infrastructure. If the commercial case for going through these processes does not place their return on investment to be higher than their cost, they will flare the gas and pay penalties to NNPC.
Yeah.
That is one leg of the problem for the electricity industry. That is upstream. Now let me come to the mid and downstream. So the gencos, for you to generate 1 megawatt of power, it costs you about $1.5 million. Okay?
1 megawatt, 1.5.
1 megawatt costs you around $1.5 million.
Okay.
Yeah? You generate power. TCN does not have the transmission infrastructure to transmit all the power you've generated. Number one problem. So you generate 6,000 megawatts. TCN is transmitting 4,002 or 4,005 or 4,004. There's a loss because the infrastructure to transmit it is not available. So the gencos are saying to themselves, there's no need now. Let's just stay there and stay with the business we're doing. Number two problem. Number three, market operator gets the load that they're able to transmit based on the infrastructure they have. And then about 55% of the market does not have prepaid meters. Number one, which means that they are underestimated billing. Electricity theft. Some part of the market, even on prepaid meters, are stealing power. They will bypass the meters, and they are losing. The losses are coming to the disco. Those are commercial losses. Technical losses, infrastructure issues. This one that got damaged, this one, power went off, lost to the disco, and all of that stuff. Because there isn't sufficient coordination, and infrastructure. So the discos are telling themselves, okay, your market operator is giving 4,400 megawatts of 6,000 to the discos. The rule says that we have to put up like a minimum payment guarantee or a bank guarantee, a BG, with the market operator to ensure that the load that they say they are taking, they've already provided the revenue assurance for the GENCOs. Some discos are not able to put market minimum payment guarantee because they are not liquid. They are owing market operator. Market operator is owing the GENCO because you can't put up minimum payment guarantee. There's no BG to cash on. And now you have 4.2 trillion naira of debt from unpaid invoices, what they call final settlement statements, to the GENCOs, right? The GENCOs don't have money to pay for gas. But the only thing protecting that gas supply from going off is that the government of Nigeria did like an arrangement where the World Bank, World Bank is divided into two. You have the International Development Association, then you have the International Bank for Reconstruction and Development, IBRD. The idea came in and provided what they call a partial risk guarantee, to the gas aggregators and say, listen, we're going to provide a partial guarantee that on the gas that you're delivering to the GENCOs in Nigeria, if they are not able to pay because of all this inefficiency in the system, you have embeds there. Embeds is providing subsidies to the markets. I'll come to that. If they are not able to, pay because of all these problems, and now you have 4.2 trillion naira of unpaid invoices, we're providing a partial risk, a bank guarantee that you'll get some parts of your money back, most parts of it back. So don't turn off the supply of gas to the GENCOs. That's why, there's still up NEPA. At least people are still seeing light and it's going off. So electricity prices, for band B to D or B to E, I don't know what the bands are anywhere between 3 and 7 cents per kilowatt. If I'm wrong, the experts here will correct me. The prices are not tenable because of the devaluation of the naira. Okay? Because gas is priced in dollars. A lot of the equipment and infrastructure, maintenance, C-check maintenance, and the expenses of these GENCOs are mostly in dollars. So they usually do their numbers in dollars.
Okay.
Because of the devaluation, the cost of electricity per kilowatt is not tenable. And that is now compounded by the fact that not only do you have half of your consumers on postpaid billing with no revenue assurance, yeah, you also have the lack of liquidity and fluidity in the value chain to ensure that there's revenue assurance and the GENCOs are able to pay the gas people to keep the supply and the whole chain going. It looks complicated, but these are the issues. This is the reason why, Carlo, anytime this issue of electricity comes up, I usually don't like, say, oh, the minister is this, the minister is that, because I have a little understanding of how the system works. And I know that the problems in the power sector in Nigeria are beyond the minister. I'm not holding brief for the minister. I've never met him in person, I'm not holding brief for him. I'm just saying that it's complicated. And solving it, and one of the reasons why, they did the Band A was because they wanted to partition a section of consumers who they believe could afford it, even if they've not lived up to the assurance of what they promised those consumers, to see how they can reduce the impairments that they have in the invoices that are due to the market operator. But of course,
I hear you, Kevin.
I don't want to get into the politics of
no. I hear you. It's just. I'm going to hand over to folks to speak now because I think I've hogged the mic a lot. But just the paper I told you about, the actual bill was 20 million for 3 hours. So they pay 20 million every month, and they only got 3 hours of power. 20 million.
Carlo, that is shocking. Shocking.
Pun intended. Yeah. I mean, it's just too expensive. I hear you. So I think what I took from what you explained was that it's tied to the dollar. So once it's tied to the dollar, I see Nigerians can't afford anything dollar-based. So I think that makes sense for me. But let me throw the floor open, Kevin. I think you've spoken a lot. We've talked about the oil reserves in the frontier side. In summary, you're saying there's oil there, but it's not commercially viable. If it was, we would have seen it by now. That's your point. On AKK, you've given me a lot of hope that they've done a lot in terms of the pipe laying, but you're talking about the aggregation of the gas. That has not happened. So they might have the pipes laid, but we don't have any gas infrastructure to aggregate that gas, we'll cool it or whatever, and then pipe it. So we're still really some 2% pipe laying completion, not at the actual project itself done. I've got Ken, I've got Ewamase, I've got Teke, all want to speak. Let's go straight to Ken. Ken, thanks for waiting so long. I appreciate that. Kevin is here. Please go for it, sir.
Thank you so much, Carlo. Good evening, everyone. And thank you, Kelvin. To be honest, Carlo, you have the best person. I've just been nodding my head since while he was talking, and a lot of things that he has said is just spot on. And what I would just like to talk about is the AKK pipeline, because I was really interested in that project when it was announced, when the contract was assigned to Oliserve to start the construction. And not just about that pipeline, the fact that, we can finally have, I would say, a gas network, some sort that would be integrated across the country, where to another part. But also I read that the plan was this the Siemens deal. The Siemens is a long document, well-written document. I know it was written by Siemens personnel because of the structure of the document and the plans. The way they phased it, phase 1, phase 2, and phase 3, and what they plan to achieve. I was really hopeful that Buhari would get it to work because of how how the plans would tie to the AKK pipeline. But the truth of the matter is today, yes, Kevin has talked about the fact that, because one question I've always asked is the fields that will serve this pipeline, where they at least, you should have those projects happening in parallel. So the AKK pipeline is going on, and we should be hearing of FIDs towards, projects, fields, development that will feed this pipeline. So we should have construction of these facilities right now. But Kevin has been spot on. Where is it going to come from? Where is the gas really going to come from if today AKK pipeline is ready? The answer is we don't know. We don't know how we are going to feed this pipeline. And then the other thing, let's even say the pipeline is ready, the gas is ready. Now they plan to actually have about 2,000 megawatts thermal plants in Abuja and also in Kaduna, and it's all tied to this AKK pipeline. We've not heard anything about those power plants yet, as of today. No groundbreaking ceremony, nothing. So are you telling me now what you are saying right now is the pipeline is ready, the gas is ready? So where do we have the offtake? What's going to happen to the offtake in terms of utilization?
But he's saying the pipes are not ready and the gas, whatever collation is not ready.
I know. I'm just reinforcing it. That okay, let's say the pipe is ready. This is ready.
So I should mention to you, Ken, that NNPC Gas and Power Limited has a project, an IPP in Gwagwalada, As a matter of fact, I'm privy to details about a shipment of equipment that arrived through Shimek. Shimek is a Chinese company. Last year, July, specifically July, sometime around the 20th of July last year. And I've always said that one very veritable arm of NNPC Group that I see prospects for, if it's properly managed and they have a good head managing it as EVP and then the team, is gas and power. Because NNPC can take advantage of its domestic area, one of which is gas, as a means to feed to any IPP built around Nigeria. Of course, there will be issues around competition and fair pricing and all of that stuff. To be sure that it's not, trying to take a leg up over its competitors. Based on how the flow is, because you have horizontal structures, you have vertical structures. Horizontal structure is where everybody who is in that supply chain has to go through NJC. Vertical is when NJC is excluded from it. So Shimek is actually going to build an IPP as a contractor for NNPC Gas and Power. And that IPP, most likely, if they apply for a GENCO license on NEC, they get it. Or they decide to sign a PPA with a GENCO, and then the GENCO sells the power, and then, they know how to structure the commercial agreements. So that is, just on your question about offtake, that's the reason why I stepped in. I'm sorry to interrupt you.
Yeah, I mean, so...
Yeah.
Yeah,
Okay.
so Ken, if you want us to... Are you okay?
No. I'm okay. It's quite interesting to hear about this. This IPP. I've not seen it in the news. I've not seen it anywhere. If it's something that is not being made public and all that because of the contractor you've mentioned and the people involved, that can be understood. But from that document, from the Siemens document that was published, then Siemens was supposed to construct about, I think, 1,800 megawatts in Abuja and another one in Kano, all tied to the AKK for offtake. And also the plan also then was to also feed other IPP, other power plants, also for, domestic use and all that. And the idea is also to stop trucking, or I would say limit trucking, or, of compressed, natural gas all the way from the Niger Delta all the way down to the north central, most especially Abuja, Kano, and Kaduna. But looking at all that, what I would like to conclude on is with regards to our strategy towards gas. We used to have a gas master plan, but that gas master plan is not being I really don't know how to put it, but it's not being implemented the way it's supposed to, because Nigeria is actually a gas country. We have so many fields in the Niger Delta that, in those days, in the 60s, in the 50s, 70s, when they discovered gas fields, they just plug the well and leave because of the business case of developing gas fields then.
Gotcha.
But what we have right now is that some of those fields are being revisited. Like, I know Shell is trying to develop the HA and the HB fields right now, which is a field that was discovered in the 60s. So they just basically plugged it and they left it because it was gas.
Yeah,
then people wanted oil, not gas.
That field is attached to Sunlink, if I'm not mistaken. I think they have a JV with Sunlink.
Because there is
Sunlink owns about 40% of that field.
Exactly. And then we are even talking about Train 7 in the NLNG. Train 7 in the NLNG.
Train 7, by the way, needs 1 trillion scoop of gas per year.
Exactly. But Train 1 to 6, we are not doing up to 60% utilization up to today.
Yeah.
We are not utilizing NLNG 100%, even up to today. But we are still doing Train 7, and Train 7 is supposed to have gas fields that will feed it. And then now we are having problem with the AKK pipeline. So, I mean, the Minister of State for Petroleum needs to really sit down and let's have a strategy towards gas, because Nigeria is a gas country. We can use it to our advantage. Thank you. Let me not talk the mic too much.
All right, Ken, I appreciate that. Let's get Vese.
Yeah, good evening. Good evening, can you hear me?
Yes, I can.
Okay, yeah, good evening. Yes, thanks very much for this space. Let me get straight to my questions. It's been a very rich space. I'm going to re-listen, so I can take. I think Kelvin should even, put out a course on a macro understanding of Nigeria's oil and gas industry. Now, my first question, I'm from Delta State, and I've heard a lot about how gas pipelines are emanating from Delta to West Africa and to various, places. I'm now talking about state utilization of gas within Delta. What are the possibilities?
The states don't have control over it. So
I understand.
No, hold on. NNPC has an arm called NSPC. That is your pipeline company. It's a subsidiary of NNPC. They manage 5,000 kilometers of multi-product pipeline. The states don't have any control over that. The states cannot tell NNPC what to do. They can't. But you have your network access code under your, gazette that has been developed by NMDPRA from the PIA, that enables people to come in and participate. But the upstream and midstream decision on the flow of gas pipes, infrastructure, still lies with NNPC. The states individually don't have control over it. I just wanted to put that in context so that it will help guide your question.
Yeah, but Kevin, why? I mean, okay, but let him ask the best. Go ahead, please.
Yes, okay, yeah, thanks for that. So, are you saying that, within the context of whatever framework that exists right now, it is futile for states to, want to develop a gas master plan for themselves?
Me and Kalu showed you a map. Let's refer back to that map. Kalu posted a map of gas pipeline infrastructure planned, already existing. Can we just refer back to that map? Okay? There is no part of this infrastructure that already exists or is planned, yes, that any state in Nigeria has control over. None. None.
Well, what about Abia State and their gas power? How does that work? They got I think they got an exception a long time ago. I think Bat Ochi got an exception, right?
He's operating under a captive energy framework. But geometric power is not. I don't think geometric power is a Genco.
I think they got an exemption because they were fighting with Enugu. I had a fight with Enugu that time. So I think because they use gas, right? They use gas.
Yes.
Okay, just for the clear. So, but that's wrong now, Kevin. So that means a state like Lagos or even a state like Abia can say, okay, we have an oil field here, it's not being used, which is what he's asking. Why can't we just go there and develop that oil, get little gas, power one small local government area?
So it is. So I'll tell you what, Carlo. The field, NUPRC has to award a block first. If it's a marginal field, if it's an onshore field, depending on the size of the field, what this thing falls under. You still have to go through. It's either a JV or a PSC. PSCs are mostly offshore, or sole risk, right? In most cases, it comes under. You still have to partner with NNPC. The federation that's represented by NNPC has a share of the assets. You have a share of the assets. NUPRC has to award a block for you to be able to operate, go into any kind of development. And earlier when we were speaking, we talked about different phases. We talked about seismic. NNPC has an arm called NSEF that does seismic for fields. You do your seismic, you come up with your data, and then you find that there is any trace of hydrocarbons, you go into your exploratory drilling of well. You do your commercial case, and if you pass that phase, then you get a recovery ratio that is good, with a good hurdle rate. You go to appraisal, then you go to development, and then you hit first oil, and any way you do it, you still have to work with the state. NNPC has to work. The state has to work with NNPC. Okay. So there's a major problem in Nigeria, and it starts from Land Use Act. Because problem is that the states do not have control over their resources. Period. They don't. Nigeria operates a federal system where everything comes to the federation, and then the federation shares to the states. Okay? But the powers to explore and manage the resources at the states lies at the federal, with the exception of gold, because for many years now, some people in the Northwest have been mining gold illegally and then flying it out to black markets in Dara and Dubai until today, with the exception of gold. So we have to come back to the structure of the federation, which is the reason why, without fiscal federalism, we keep running this federal character system.
Okay.
Just keep
Kevin, I'll take that answer because we really can't delve into it here. But what I hear you say is that gas is federal. States own the land.
It's federal.
If states could do gas, even if it's marginal gas field, it will help. But let's park that aside. I think that answers this question. Let's just nothing we can do about that. We can just say it should be maybe not on the exclusive list, but on the concurrent list, maybe. And I would think maybe marginal fields can be given to states, but just say all the gas in Nigeria should be a federal thing. It stifles development. But I hear you, sir.
Uncle Kalu, yeah. So, just on this, see, we understand the whole the way Nigeria is at the moment. You understand? But I'm just saying, even within this current dysfunction, are you saying that if my state, now, for example, Delta State, wants to, in a way, whether it's partner, whether it's MO, whether it's whatever they can do, try to leverage that gas for some level of productivity?
What is the structure of the leverage? Leverage is a very big one. What is the structure of the leverage?
If they want to,
explain it.
Delta has gas somewhere. They want to use it. That's what we're all saying.
Delta has gas. They want to use it. Delta has to set up a state investment corporation. And use that state investment corporation to set up a trust. Then that trust will now own shares in a limited liability company that will partner with NNPC to explore.
Okay. Well, we've heard. I mean,
Can I quickly throw light on
very, very, very quick, Ken? I want you guys to speak. Very, very quick, Ken, please.
I have a practical experience on this one because there was a project I worked on that is a power plant project in Bayelsa. So essentially, it was a project that was championed by NCDNB as part of CDI, Community Capacity Development Initiative for that power plant to be built. And the way the state government came in was the state government came in and provided, for example, they provided the land for such a project. And that project was built, it was commissioned, until today that project runs 24/7, utilizing the presence of gas pipeline spread all across Bayelsa. And all they did was just to tap into one of those pipelines and then that plant is running 24 hours right now.
Who said who tapped in? The state tapped into the pipeline.
No, what NCDMB created an SPV that runs that power plant.
Ken,
yeah.
Do you see the structure of the leverage that Ewuma is talking about?
I get you. When you say structure of leverage is you are spot on. It's a very big word. I get that.
So in this case, you are saying that the state can provide land, then the gas company can come to that land, develop the gas field on that land.
Exactly. That's an example. That's just an example, and that's a live case scenario of something that actually happened. That plant was commissioned by.
By the way, NCMDB is government too.
Of course, now NCMDB federal government.
Okay.
It's important to clarify that.
Okay, good to know.
Federal government, yeah.
Good to know. He has dropped off. Let's get Teke. Teke is here. Teke, you've got the floor. Go ahead.
Thank you, Calvin, and thank you, Kelvin, for another rich space. Listening to Calvin's breakdown on some of the things, hindrances. I mean, with Nigeria, if you don't listen to a little part of our problems, you just get migraines instantly. But I want to step out a little bit, kind of go maybe 1,000 feet higher than this conversation that's going on right now. Maybe Calvin, maybe you can have a different space on the cost of building transmission line, because holistically, when you look at all of these problems that we're talking about, you would have thought, I am thinking, and of course I'm not knowledgeable enough to know whether this thinking is flawed or what. You would have thought that, after looking at the pipeline master plan or the pipeline that you plans that you just said, you are seeing that through that pipeline, you will notice that none of our gas is designed to be utilized within our country to improve or increase production within our own economy, because everything is just geared to an export out of the country. Okay, and Karen also talked about transmission lines. Wouldn't it be more useful so that maybe the government can get more internally generated taxes to increase productivity within the country by at least expanding our transmission line, so that the additional 5,000 megawatts that is even being wasted?
Sorry, Teke. The transmission line you speak of, is it gas pipeline transmission?
Power transmission line. Power transmission line. So that you can increase productivity within the economy to fund all of this crazy, take the gas out of Zouk and earn foreign exchange. Would it have made more sense? And this is just a layman talking here. Thank you.
Teke, if you listen to my breakdown of the issues that Nestle has earlier, you see I said the transmission infrastructure that TCN, by the way, is owned by the government. It's owned by the government. Transmission infrastructure they have today is not able to take more than 82% of the load generated by the GenCos. So if you were a businessman, for example, take it, you have $500 million, just for example, and you say, come and invest in the power sector in Nigeria, and you say, okay, let's look at the transmission infrastructure. And then they tell you the government owns transmission infrastructure in Nigeria 100%. And the transmission infrastructure it has cannot take more than 82% of the load generated by the GenCos. Will you bring your money?
No, I will not. But that is why I'm asking, wouldn't it have made sense for the government to focus on expanding the transmission line?
You see this. Number one, today, the 2025 budget is dead. It's dead because in a cash waterfall scenario where you do cascading, $62.50 is break-even for all the loans that government is owing on crude oil, 447,000 barrels per day is used to pay debts, crude oil debts, crude oil swap. Today, out of about 714,000. $65 is amber light. You know when you have red, amber, and green. Red is stop, amber is get ready, green is go. $70 is green. Okay? Today, crude oil price is over between $62 and $65 a barrel. I think it's going to settle around $60 and come down to 55 and stay in that range for most of the second quarter of 2025. So 2025 budget is dead.
That's a big problem.
The deficit financing is 18%. Debt to GDP ratio is over 30%. Okay? The government cannot borrow enough to cover the deficit for 2025 budget. It can fund salaries and pensions. It can't fund capex. It can't even fund up to 20% of the capex in 2025 budget. Where will they get the money to invest in transmission infrastructure?
But bros, not be borrow with the borrow since we start this thing.
But we're borrowing based on $75 a barrel at 2 million output. Now he's saying oil is going to go down to $50 a barrel, and output is about 1.9. So it's crazy.
I heard him. I don't understand what
and Kevin, you said that very, very casually, Kevin, if oil prices go to $50 a barrel and stay there, then Nigeria is in serious trouble. Kevin, you just said that in passing. You are saying it very casually.
Kalu, let me tell you what is even more worrying. And after this space, I will share a spreadsheet with you. Let me tell you what is more worrying. The 447,000 barrels of crude today, every single breaking day, Nigeria pays today 447,000 barrels of crude to debtors, to creditors, who borrowed the country money upfront in exchange for crude oil future production. All your refinery turnaround that NNPC wasted, all your vendor financing program, all your Project Gazelle, they contribute to the 447,000 barrel debt on a daily basis. Every breaking day, Nigeria is paying 447,000 barrels of crude to creditors.
Kevin, let me ask you a question. Kevin, question for you. When we borrowed money from Afrexim Bank, we are paying them back in barrels, right, for the dollar. So if we give them the barrels of oil, are we good, or we have to pay them the dollar amount?
So what is more worrying is this. For those wholesale agreements, there's usually what they call a strike price. It's like a future contract. A strike price. That price is what insulates the creditor. It says, when prices are high, oil prices are high, the people who are borrowing are happy. You know why? Because if they say a strike price is at $57 a barrel, for example, what they are telling you is that you deliver the crude oil, the company they nominate, if they are not a commodity trader themselves, there's a bank, they will nominate a trader to collect the oil on their behalf. Trader will sell the oil, pay back the dollar equivalent at $57, which is the strike price. The difference between the strike price and the open market rate, so say for example, open market rate, for example, is $75. That difference of about $18 a barrel, it goes into what they call an offshore debt service reserve account, if there's one, that has been set up by the debtor, person borrowing the money. Now, when prices are high, the people borrowing the money are happy because it's a hack they've seen to be able to make money for themselves without reporting it. So the difference between the strike price and the open market rate goes into an offshore reserve account, debt service reserve account that is not appropriated by the government. It's black. They can do anything they want. It's like a dark pool. But when prices come down below that strike price, so if, for example, strike price is 65, prices drop to 60, the trader will not take the oil. Why? Because the contract says that you have to give us the oil at an open market rate that is equivalent to the strike price. So if there's a $5 difference, you either have to put up more crude oil that will compensate for that difference, or you use your debt service reserve account to pay them cash equivalent of that difference.
But our oil output has not gone up. So where are we going to get the?
So I'll tell you what is going on now. The contracts that exist for the amount of crude oil that the government pays every day, the average price, the cumulative price, average price of that wholesale agreement, all the agreements they have, based on the data I have, is anywhere around $60 to $62.50. Where is crude oil price? Crude oil price, Brent is about $64, $65 a barrel. I think it's going to come down to like $60 or $55 and stay around that range for another 1 or 2 months, depending on how things go in geopolitics. Okay? How will they pay the difference? So what is happening now is that the government has 60 million barrels of crude that has been allocated to people to come and lift, but they've not lifted it. And then they've not lifted it because of crude oil price. They've allocated it for your vessel to come to the terminal, load. It takes about 4 days for you to load a standard vessel with crude, and then take off. They've not lifted it. It's hanging. So the government is having to divert some of that crude out to other realistic use, so that because if you keep crude and the throughput gets filled up, as you drill it on a daily basis and it goes from flow station to terminal, there will be an overflooding of throughput and there will not be a place for you to stop. And you can't stop the rigs. So you have to send out the crude from the terminals. Are you seeing the bigger problem they have? And this problem they have is because, number one, you have too much debt. Number two, for a lot of these wholesale agreements that were structured between 2019 and date, they didn't build in debt service reserve account as a buffer to shock drop in price. So you have basically what you call a cash waterfall model that helps you to do best and worst case scenarios and to plan. The only one they did a DSRA on was on Gazelle 1, Project Gazelle 1, which was a loan from last year that was heavily inflated. They pledged 164 million barrels in exchange for 3.4 when you needed only 45 million barrels of crude to pay back that loan with interest. Okay? So this is a bigger problem Nigerian government has than even funding the budget.
Okay, Kevin, let's not okay. Kevin, I was going to ask Abbas Sogo has dropped. Let's let Jack the Builder. Jack, welcome to the conversation. We're talking NNPC, we're talking the frontier oil drilling, we're talking the gas pipelines. Jack, you've got the floor.
Thank you so much, Carlo. Kelvin, good evening. Good to be here and listen to some of this analysis. So, I mean, some of us already know about some of these issues as regards to funding our budgets and the debts and all of that. But I'm more particular about where it hits me differently, which is about Southeast now. So I know that there is a concession, a company called, I think, Frado or something, Gas Limited, got a concession to build a pipeline from somewhere in Edo State, I think Oben also, all the way down to Anambra. And, there's rumor sometime last month that, construction has started. I just want to confirm first if this is true, if there's any truth to this, because I know that they got this concession as far back as 2013 or 2014 or thereabouts. So I just want to know if you have any information on that line. The number 2 question would be about, can you give us an idea of how much really it costs to build a standard, high pressure gas pipeline, maybe like a kilometer of it? And if you think that there's any state government in Southeast that has the capacity to actually build one. Thank you.
Kevin.
Your first question about
Kevin, I don't know my question.
Yeah, I don't. I'm not in the know about the maybe joint venture between Frado and government or what pipeline, what project they have. I'm not privy to the details of that transaction. But your second question was about if state governments can build. Can you please, if you don't mind, I'm sorry.
No, so the first, that question is part, like there are two parts. The first one is how much it costs, like an average cost to build the high pressure gas pipeline.
So if you listen earlier when we started, I don't know, maybe you joined later. I was talking about the EPC costs, the design of AKK. We were talking about, Carlo even brought a map of existing and proposed gas pipelines in Nigeria. We analyzed the pipes. We're talking about the fact that we compared it to an export pipeline that Russia built, Gazprom built in partnership with Sinop, I think, either Sinop or NNPC, to China through Mongolia. I think the IPC was anywhere between $1.2 and $1.5 million per kilometer, about 4,900 kilometers, if I'm not mistaken, anywhere around that range. They constructed. It took them 4 to 5 years, and they were done. They finished it 4 to 5 years.
I think where he's going to is that is there any Southeast states, Abia, Enugu, that can put something together if they had to do it on their own? I think that's where we're going to.
So the typical cost of a gas pipeline project per kilometer ranges anywhere between 650, 700K. And if it's a domestic pipe, it shouldn't be more than $1 million per kilometer.
Per kilometer.
In Nigeria, NGIC, which is the subsidiary of NNPC, that's in charge of building infrastructure for gas, is quoting $30.2 million per kilometer. Number one. Number two, state governments cannot build gas pipelines themselves because of the way Nigeria is structured today. NNPC has a subsidiary called NSPC that manages the pipeline infrastructure, multi-product pipeline. And NGIC is the only entity that can, in partnership with any other player, commission pipeline projects for gas in Nigeria, transmission projects, because of the way it's currently structured. Because oil and gas is in the exclusive list. Oil and gas falls under mining, and mining is in the exclusive legislative list. Mining is not under the concurrent legislative list.
Kevin, if I may.
Even if all the states come together and contribute money, they still have to go and meet NNPC.
Kevin, if I may, say let's take maybe Enugu State or Abia or Imo, that is APC, close to Tinubu. So I think if Imo State was to build a pipeline and go to Tinubu and say, hey Tinubu, this pipeline will make the Southeast vote for you. I mean, can Tinubu sign a waiver and say, okay, this pipeline should be connected to the NNPC guy? Do you get where I'm coming from? Like, let's talk to politics now.
A better way to approach it would be for the Southeast governors to go to FEC, speak to the president, and have FEC approve. Okay, I thought, Kalu, I'm sorry. Let me just come back. So, the new team at NNPC, the executive management and the board, the appointment letter, if you check the two or 3 page document, the appointment letter, what circulated around social media was the second page. The first page didn't circulate around social media. The first page had the letterhead of the Ministry of Finance and Mofi. So the appointment letter didn't come from the villa, it came from the Minister of Finance, because the Minister of Finance is in charge of Ministry of Finance Incorporated. Ministry of Finance Incorporated, based on the PIA, owns 50% of NNPC as a group.
But
of the new management of NNPC and board is the Ministry of Finance Incorporated, which is under the Minister of Finance.
That's holding it for me in trust. I'll be holding it for the state in trust.
Holding it for the state in trust, the federating unit, federal, state, and local governments. What the point I'm trying to make here is simple. You have to follow the reporting structure on the organogram. So the state governors have to go to the minister, the CME, and the president and say, please, we want this. And then they'll send a memo. And
Jackie, see where I'm coming from, Abi? Jack has answered your question. That's what he's saying.
Yeah. So just very briefly, I think that when it comes to the cost of construction, I feel personally that maybe in Nigeria, because of lack of steel processing plants in the country, I can tell that maybe that might also cost, it will cost more basically to build a gas pipeline in Nigeria. So that is understood. Then for the what you're talking about.
No, I don't agree with that. Please don't justify the inflated EPC costs. I don't agree with that.
No. So Kelvin, hold on. I'm coming.
The Chinese were supposed to fund AKK. They pulled out. Why?
Well, I wouldn't know why, honestly, because I mean you're the expert here, so
inflated costs. Inflated costs.
Exactly. Okay, that's fine. So the last point I want to make is this. I understand concurrent exclusive list and all of that. It's just like, trunk A roads in Nigeria. Normally, state governors are not supposed to build them. But, I mean, if it affects the life of your people, you can say, the state want to bear this cost. So the question I just wanted to ask is, looking at the finances of our state, do you genuinely believe that if a state says, we want to build this, right? Forget about approvals now. I know that they can always walk around approvals.
You can't forget about approvals. How are you forgetting about approvals?
I mean that they can navigate, I believe.
From control tower. Can it lift off? It can't lift off. You can't forget approvals.
No, okay, so I agree. Okay.
The problem here is the federal structure. That's the problem here. The problem is not the capital. If the structure is right, the capital will come, will show up. The capital will show up. It's the same explanation I gave about power. The problem in the power sector is not investors coming in. Investors are willing to come in because the population is much. But the investors are asking themselves, what's the per capita income of Nigerians? Can they afford steady power? That's the first question they're asking themselves. They are looking at what is the percentage of Nigerians that are metered? What's the percentage of the technical losses? What's the percentage of the commercial losses? What's the infrastructural capacity of TCN to transmit load generated by the GENCOs? What are the prices of gas? Is it fair? Is it cost reflective on the cost of sending gas from fields down to the generating companies? These are the questions they are asking themselves. If the structure is not right, if the structure is faulty, investors will not show up. Look, capital is always available. The problem is not the money. The problem here is the structure. If the structure is right, the investors will show up.
Yeah.
Well, I think that problem is probably
Jack, I think he has answered us. Honestly, Jack, I think he has answered us. I think what if I can take anything from him?
Obasanjo fixed the telecom structure, and the investors showed up.
True. Same with cement.
They showed up.
So honestly, Jack, I think he has answered. Let these 5 state governors go back, do a plan, do their gas pipeline, then go to FEC and say, hey, want to invest this. We're 5 states. Election is coming up. So they would like to listen. They would like to listen to what can. Because if they do this, they can actually get votes in the Southeast. Believe it or not. So the onus is back on the Southeast to go and market this thing. Like he has given us the situation on ground. That the situation on ground, the laws do not favor states and gas. But, go and make your case. Airports are owned by the federal government, but states build them, right? So the same can happen. At this Ogo, Jack, appreciate you coming in here. That's Temi at this. Sorry, did I get it right? Temi, go for it.
I can hear you. Thanks, Carly, for hosting the space again. And Kevin, thank you for wonderful contribution. I was looking at the map, right? This was a clarification because I see on the map that there's a plan to go through the southeast, right? And if you look at the existing gas pipelines today, they are mostly in the south. 80% of the country is not covered. but then there are plans to go up north as well and go to the southeast. But you raised a concern that there was no gas pipeline going to the southeast. Is it that they've stopped those projects or what?
Yeah, if you look at that map, you'll see, go to the legend. The legend shows the red line, gas pipeline, dotted line, planned and proposed. Are you seeing the difference?
Yeah.
Okay. Are you noticing that all the pipelines, the existing pipelines, are running from the Niger Delta through Benin and then running to the southwest? And the only one that goes, OB3, that goes is the proposed feed from Benin, OB3, down to Ajaokuta to feed Ajaokuta. Are you seeing any consistent red line go through the southeast?
No, so what I'm saying, I see.
No.
Hold on,
are you seeing any consistent red line going through the southeast?
So I don't see any consistent red line going to southeast, but I saw the consistent red lines, right? They are the ones that exist today, correct?
Yes.
Okay. So my point is, it looks like all we have is pipeline all the way in the south, then all the way to Abeokuta on the west, and then going to the west of West Africa, and the one that goes to Ajaokuta. So if you look from even from Ibadan upward, there's nothing. From everything north of Ajaokuta, there's nothing, right? So it seems to me like this is more like coastal lines. The only one that breaks that flow is the Ajaokuta one. But
yes,
but I see the plan proposed one though, that goes through Ibadan, Oyo, Ilorin in southwest, and then that goes through Umaya, Enugu, and So it looks to me like, okay, they've only prioritized the coastal lines for now. And my question is, the ones that they planned, the broken lines, the red lines, they're still going to do it, or they're not doing it at all?
So, this is what we discussed earlier. I don't know if you joined later.
Sorry, I joined when that was why I was asking the call. That's how I was asking the question.
Okay. So
was that...
if I was going to go back, you have the feed from Obibo in River State, that's Port Harcourt, to Umaya, to Enugu. The left leg is the one that goes through the River Niger crossing, which is where they are right now. 1.8 kilometers, they've not been able to cross. The right leg goes from Enugu. It goes all the way to, that's the planned one, future one, phase 2 of this gas aggregation. But in this plan, in all this plan, there's no plan for, let us set up a pressure metering and reduction station in each of these states in the southeast. And notice very well that in this plan, there's no line that goes all the way to Anambra, to Onitsha, or Nnewi. Have you noticed it?
So, are you going to build...
No, hold on, I'm coming.
They're all dotted lines.
I agree.
I'm coming.
Yeah,
are you going to build a distribution pipe from Enugu without a PMRS down all the way to Onitsha, Nnewi? That's a question I'm asking.
Yeah.
In all of this, there is no plan by NJIC, as far as I know, to build a pressure metering and reduction station in each of these states where these proposed or planned pipelines are running through. The only plan is to build the pipe across the states and feed Ajaokuta.
And also to feed Jalingo.
Exactly. But that Jalingo one is the second leg of AKK that no one is even talking about right now because, the first one, they've not been able to finish it.
I mean, the creating Kelly that in Nigeria, only 2 regions have got gas, south, and southeast, right? That we know of for now.
And southwest.
Exactly.
Southwest has gas. Lagos, is it Lagos?
Okay, that has gas. Okay.
Yeah, that has gas. And there is no pipeline in the southeast. If it was a pipeline in the southeast, this would be easier. Because Enugu is right there. I mean, the pipeline in the east would just take the gas easily through Kogi and all that to the north. I'm not sure what's going on.
But they're planning to build it now.
Planning now. They've been planning.
If it's an issue.
If it's a plan, Nigeria, it's not going to happen. I mean, the plan is on the table. This is an old map. Very, very old map. And it's not, I don't know about that.
The way, okay, I don't want to belabor the point, but it seems to me more like the gas pipelines are in the coastal area because that's basically why you have it in Lagos in the first place as well. There's nothing, like if you take away Lagos and Abeokuta, which is just 1 hour from Lagos, there's nothing in the southwest.
So the like gas, look, if you take away, Kevin, correct me if I'm wrong, if you take away the NIPP came after the gas pipe. I think they put the gas pipe to take power to West Africa. So from south, it then went, it's going to Ghana, Togo, that line. That's what they first of all built it for. Then NIPP made them connect it into the southwest to power those thermal plants, Geregu and the rest. But they've never ever built any gas pipeline to power the southeast, even the south itself. The south is just leaving the south to go out. It's going to the west of Nigeria. So we're now using the gas locally. It's all being exported to the Lagos cluster, Calabar cluster. But Kevin can explain it better. That's what I see.
Okay. No, Kalu, you're spot on. That is your spot on. Because if you look at it, look at the legend. You see, gas fields are red.
Yeah.
Oil fields are green.
Yeah.
Gas and oil fields are red and green. Okay. If you look at the gas fields are mostly offshore Delta, Bayelsa.
Yeah.
Most of those gas fields offshore.
Yeah.
Most of the gas fields in this legend are offshore Delta and Bayelsa. Yeah?
Yeah.
Offshore, those PSC fields. The fiscal terms to pipe the gas off from offshore down in onshore and then take it through the horizontal commercial framework, NGC, to the different regions is the problem here.
Yeah.
So in the future, you might see vertical commercial agreements where NGC is not part of it, and companies are going to gather and take gas, from offshore fields in the Niger Delta to different parts of Nigeria, mostly the southwest. You might see that. Okay?
But Kevin, just a quick one.
The point you're trying to make, Carlo, is that for you to drive commerce in Nigeria,
correct,
for you to increase the chances of supplying the gas-based industries, like improving power generation and other uses for natural gas to make steel, to make urea, to make, different uses for natural gas, to fabricate ceramics, to fabricate glass and all of those uses for natural gas. For you to stand any chance of doing that, which is a real sector, real B2B based sector, you need these transmission pipes. You need to build this transmission pipe. It has to go from planned and proposed to actual red consistent lines.
Okay, so, and I'm happy that Tinubu is the president today because he has been fighting for state rights. And there's no greater state rights in my view than these gas pipelines. We can't have federal government saying that the state government cannot drill for gas, even if it's a marginal field. So Delta has to wait, Bayelsa has to wait for federal to come and drill their own gas. I mean, Russians, the Germans have a lot of idle plants that don't have cheap power. If Bayelsa stays, the whole of Bayelsa is going to be a free gas zone. You can come and establish your steel, your glass, your heavy metals and aluminium plants and get free power. People will come to Bayelsa even with the insecurity because it's so cheap. But we're waiting for the federal government to do it. It will be in 24 months. Why haven't we changed this law? I mean, how hard, everybody is decamping to the APC. How hard is it to pass a law to say gas should go to concurrent, or we'll give, look at how we have power. If you are doing maybe whatever cubic centimeter gas pipe, you can do it at the state level. Why is it so hard to change what we see here on this space? They see it too. What's the problem? I don't know. Kevin,
I have a question for you, Kevin, please.
Very quick, so I get others in very quick.
Just a question. Kevin, when I look at the Nigeria platform, to me, it's more like it's very stupid to me why we don't have power. Because people are willing to pay for power in Nigeria. They are paying for generators anyway. So the market is there, and no government policy has been a hindrance.
Adisa, please don't ask me a political question. I'm not asking a political question. The
question I'm asking you is, please, if you were like a consultant, right? How do you think Nigeria can produce, say, 20,000 megawatts of power in the next 5 years? What do we need to do?
The problem is not getting the Gencos to come and invest and increase generation. That's not the problem. Like I said, listen, if the structure and the markets are right, investors will show up in 6 months and they'll start working. The problem here, my friend,
So what structure
is the
should we be
fact
putting
that, number one, TCN that is owned by the government 100% is not able to transmit more than 82% of the load generated currently. That should tell you everything you need to know.
So my question then is, should we be selling TCN, letting they get government
In
part
my
of
view,
it?
my brother, in my view, I explained the situation of 2025 budget. And I was trying to make you understand that the government does not even have money to fund its existing capex in the budget. Where would they get money to invest in TCN? Where would they get the money?
No, so I disagree with you, because my only thing is when the government, I feel like really it's about structure. We don't even need to spend $1 to get power in Nigeria, in my opinion. My thinking is government should be withdrawing and setting the right policies and investment will flow in the Nigeria to produce power. I just want to know, like, what kind of things policy should they be doing to do that? The state thing makes sense, but what other things should they be doing to basically accelerate investment in power? I don't think you should spend $1 from the federal government.
So I think the government needs to unbundle TCN. That's my view. If you don't have the money to invest in TCN, unbundle it, number one. Number two, as painful as, and this is why my brother said, don't ask me a political question, because you see, this Twitter is a very unique place. People will just take something you said and then spin it out of control. Nobody in Nigeria wants to hear about high electricity tariff. Nobody wants to hear about it. And I understand. Per capita income dropped from $2,100 to $835 in 3 years. Nigerians are suffering. So I don't blame them, because the purchasing power parity is in the gutter. Okay? I don't blame Nigerians. They are suffering on many ends. So if Nigerians are saying, on top of all the shege we're saying, you want to still increase tariffs and you're telling us cost reflective because devaluation has made electricity tariffs to be below, far below what the markets need to even get their costs. Nobody wants to. But as painful as it sounds, my brother, I am telling you that the tariff people are paying from band B to band C or band D or E is not cost reflective. As painful as it sounds, so I'm not the bearer of bad news, but I'm telling you, number one. Number two, the impairments that discos have. Number one, a lot of the discos are not liquid because those licenses were given to cronies and friends. They were not given to companies that have the equity to invest in it. And what happened was you had a 70% debt to equity ratio, 30% equity, 70% debt. So, for example, the company that used to own AEDC borrowed $200 million 10 years ago at $150 per dollar. And then 10 years after, the debt ballooned just from fair value gains, revaluation of your FX rate. $200 million principal turned to $300 billion from $30 billion. Principal, the debt servicing probably went from $1.4 billion to like, how much? 32% of $300 billion today is how much per year? It's about 95 billion. How much is AEDC generating to pay 95 billion naira per year to the bank?
Not even near that. All right.
Are you seeing the problem?
Yeah.
Then you also have the problem. You also have the problem of the fact that because of these technical and commercial losses of you not having enough prepaid to get cost recoveries, the discos are not able to put up bank guarantees as minimum payment, minimum offtake guarantee with the market operator so that they can pay the Gencos the money they are owing for supply of load from upstream. So if you don't address these issues and correct the structure, investors will not come in because they see the structure. They have the numbers. The problem is not them coming in. Look, investors are always eager and waiting. They are by the sidelines watching and waiting. As soon as the structure and the environment is right, you see them deploy capital immediately.
Simple structure and okay.
Thank you. So essentially, we don't have power because we're not willing to pay for it. The people.
Because the policy is not right.
Because
So we got to move on.
People don't want to pay for it now.
Adi, we got to move on. Let's get Rudolph. Rudolph, come in here. Adi, I appreciate you. Yeah. How you doing?
Good evening, everybody. Kevin, you've made a very sound presentation, and I would just like to make a comment before I pass my question. With regards to these licenses, you can't actually decide to go drilling without the licenses because it already played out in the past when Tinubu tried to kind of initiate an IPP and Obasanjo stopped it. So that's just for that. Then to my question, I would like to ask, what is the status of Brass LNG? That's the first one, because when I was in engineering school, I used to hear of Brass LNG, and we even had dreams of probably would work there, but up to this time, I don't really know what the status is. Then secondly, I would like to ask you, what is the problem with our NLNG, the Bonny LNG? Is it because currently from your presentation, you said we are operating below 60%. Is it like an equipment issue? Is it operational issues, or is it a feedstock issue? And lastly, I would like to get your perspective. Is it better we kind of invest in more LNG projects? Because I think like the LNG market is kind of exploding because of the challenges, this Ukrainian-Russian war. I think that would be. What's your view on that? Is it better we kind of invest in this direction, get more revenues, and build the internal networks? Thank you.
Kevin, did you get all these questions? I had a lot of questions.
Yes, the first question was about Brass LNG.
Brass LNG, what's going on? He wants to work there.
No, I don't intend working there. Former drill.
Nigerian NNPC owns 49% of Brass LNG. Eni has sold their onshore assets to Wando. They are still offshore. ConocoPhillips has sold their Nigerian assets. I think ConocoPhillips sold their Nigerian assets to Wando, if I'm not mistaken. I think that led to the feud between Gabriel Volpi and Wando back in the day, many years ago. I think they sold it for about $1.1 billion, if I'm not mistaken. And then you have Brass Holding Company Limited, which is an affiliate of Total. So, look, the problem is this. Even if these companies were to put their heads together and say, okay, no, I want to compete with NLNG, what's the business case for them? Number one. Because there was a month this year, the third week of February, when the feedstock to NLNG dropped to about 27%. 27%. Third week of February this year. The feedstock, the capacity utilization is below 60%. What's the business case? Why would you want to install capacity for liquefying methane into LNG or separating wet gas into lean gas? Get all your family of C1 to C4 when you don't have feedstock, when you don't have assurance of feedstock. You can't even commission FID without signing a gas supply and purchase agreement with aggregators to get gas feedstock. You can't commission a project. You can't. It's not viable. So the question is, between NNPC, which is mostly JV partner, operating like holding government's assets, federal government of Nigeria assets, NNPC, Wando, that owns Eni's onshore assets, ConocoPhillips that has sold its onshore assets to Wando, and then Brass LNG, which is an affiliate of Total Energies. Where are they going to get the gas? When Total, Shell, are struggling to get gas to feed NLNG, which they are major shareholders in. Where are they going to get gas? So if you can't get the gas, why would you want to build infrastructure for gas when your competitor is struggling?
It's an integrated problem. It's an integrated problem. With all that gas reserves, no gas pipelines, no gas laws, no gas availability. It looks like all this gas. I don't know.
So just going to the second question. So the challenges LNG Bonny is having is actually not like something like equipment, operational. It's mainly a feedstock.
It's feedstock. Period. Wow. No long story. Feedstock.
Then we have a long way to go there.
Very long way. What's all this gas thing we're talking about in Nigeria? We're not ready. We're not ready in Nigeria.
Yeah, because I was thinking like my own view. If I was like given this kind of business case, I was thinking we develop the LNG, earn revenues, and build the internal networks. But you don't even have.
How are you going to develop
these plans? Yeah, that's the challenge. So. It's like
the way you're saying it is very smooth.
It's like roofing a house without foundation. It's not possible. Yeah.
Okay, gotcha. Let's go to Eze Chikwelu. Eze, how are you doing? Rudolph, I appreciate you, sir. Thanks, Eze. Go ahead.
Yeah, I'm good. Thank you, Calvin, for having me. Kelvin, two things. First of all, Kelvin, you need to tell us the food you eat and the water you drink.
His brain is, I don't know.
Learn, exactly, so we'll be able to magnet things when we see them the way you've done. So I think everything that has been discussed here to me is the relic of the past, of NNPC. Kelvin, part of this, the topic of this space says the new NNPC board. Kelvin, I want to come in from the future. I want to come in looking at the future, right? We have a new NNPC board. A lot of people, whenever you have a change in government or board like this, there's always a floodlight of, hope. But this one, I think there's a sprinkle of hope around, right? But we don't know. People would always come around and say they are veterans in the industry. They've been around for a minute. They know what they are doing. They've been with SPDC, Shell, and blah, blah, blah. Calvin, before you answer this question, you are the only, let me give you your flower here. You are the only person I believe I listen to when it comes to oil and gas in Nigeria as of today. Any other person...
Please don't say that.
Same thing here. Same thing. If Kevin does not confirm it, it's not working for me. Kevin must confirm it.
Exactly. Kevin, even if government publishes anything, I would say I will go to your handle. I'll wait on you on Arise and say, what has Kevin said? Have he said something? If he's not said something, I will not take it. Right. So I want you to know the work you've done so far. What you have earned, and is my way of saying thank you and well done. So looking forward into the future, right? The NNPC board, great guys, profile, great guys on paper. We may not be able to tell sitting here now what they would do, but looking at their policy angle or policy direction, do you think we are going to get some breath of fresh air? You can rate them for now, looking at their policy direction 1 to 10 if you want. Do you think we are going to get some breath of fresh air within NNPC? Or if not, what direction would you prefer they go to?
Thank you. Thank you very much for the very kind words. Thank you so much. I appreciate it. So, first of all, I'll tell you that the new board and management are an improvement on what you had before. There's a marked difference. The statement Ojulari made about frontier basin exploration, I think it's a political statement. I don't think he's serious about it. Because he's been in the sector for more than 30 years. He knows this thing like the back of his palm. His career started around the time when PSC 93, IBB structured PSC 93 and, awarded 80 oil blocks out to companies, and then they put in the fiscal terms that part of the conditions on which they will be awarded was they will explore frontier basins in these 6 basins I mentioned earlier. And if we're not around, I mentioned Bida, Kudu Up, Ahoko South. I mentioned the Anambra Basin, Dahomey. I mentioned Sokoto Basin. I mentioned Chad Basin. than the Benue Basin. So you have the Benue Basin, you have the upper Benue, you have the lower Benue. The upper Benue was what you have. It used to be the Gongola, but it's now the Bauchi Gombe. Lower Benue, I mentioned Onitsha and Abakaliki belt. So this new board, their first task is to review and audit. Their first task, the board. Notice before now, NNPC Board did not have board committees. You can't have a company that size without board committees. Risk management, financial committee, board audit committee, different kinds of, because boards are important because they serve as accountability and check for management. They set strategic vision and direction for management. That's why boards exist. They're extremely important. You can't have companies run without boards because boards enforce corporate governance. And because most of these large corporations and companies are subject to regulators. So in the oil and gas sector, you have NUPRC, you have NMDPRA. They require corporate governance so that they don't fall foul of the laws that govern the sector or industry. So the first step for this new board is to build corporate governance structure, which in my opinion did not exist because Mele was running a one-man show. There was no board. NNPC, the former board was like on paper. They were not in existence. There was no board. So the first step is to build corporate governance structure. And I think this new board is starting with that. It's going to take some time before you see any result. I'm not holding brief for them. If you know me very well that I have been very critical of them. I'm not holding brief. I say it as it is. Okay? When Ujulari made comments, I criticized it because I felt it was like a move that was not smart. It was like out of character, didn't make any sense considering the experience he has. But I think it's a political statement because considering that nearly $30 billion has been expended in Nasarawa, in Bauchi, Gombe, and in Borno, in the Chad Basin, and there's not been any results. And I heard this week that just passed, one of the anti-corruption agencies raided FIS office in Abuja. You see very well that, they have a long way to go. I'm not holding my breath. Okay? I'm not holding my breath. I'm not going to come and tell you, in 5 years you'll see this, you'll see that. Because they have a huge hole on their balance sheet. NNPC has a huge hole on their balance sheet. You cannot really get anything working in NNPC without you sending it out from the government control to the markets. NNPC has to move from being operated by the government because Nigerian government has proven over 60 years that it doesn't have capacity to do business and run business. It just doesn't have it. It has to go to the markets. And for you to go to the market, it goes through several processes. Number one, you have to do evaluation and classification of all your assets. Yeah, you have to check the reservoir modeling, check the estimated ultimate recovery, check your contingent assets and liabilities. You have to look at your net asset value. You have to model it after NAV, and then you have to model your 2P and 3P reserves after DCF, and then arrive at a confluence of your value, start valuation, which is the middle or second step. And then you go to issuance for you to go to the market. NNPC has to transfer control and operation from government memos to what the villa wants, to what the board appointed by the shareholders in the market wants for the corporation and how they are creating value for shareholders. That step is very significant. And in my estimates, this is going to take, I was in a meeting earlier this past week, and I was just saying that, listen, this process might take, at the minimum, based on the realities I see, 18 months. 18 months. The first step will take them 6 to 9 months. The second step will take them maybe another 6 months. Third step will take them 3 months. So add 9 plus 6 plus 3. That's 18 months. So the question is, between now and 2027 election, do you have 18 months? Do you think the president will want IPO to come 3 or 4 months before presidential election? Are you with me?
Yeah.
Yes,
So
yes.
This is why I am like cautiously optimistic, cautiously with a huge, like bracket or asterisk on the both sides. I'm cautiously optimistic about the new board and management. I'm not holding my breath. I'm not holding breath for them, but I'm telling you that they are a huge improvement on the past, because before now there was no board. It was a one-man show.
Interesting.
Hello, can I throw in my last question to Kelvin?
Very
Carlo,
quick.
the question also-
Very quick.
Yeah, the question also goes to you, Carlo. I want to, this is like putting you guys on the spotlight, but Kelvin, if you guys don't want to answer, fine. Kelvin and Carlo, if NNPC or any other person that comes up here, please, if NNPC goes public with an IPO, would you put your money on it?
Depends on the price.
I mean,
Depends on
your
the
money,
price. Depends on the price.
not your money on the fringes, your core money.
It depends on the price. On the price, really. That's just it. If it's at a discount, because NNPC has some good assets. Apart from they have pipelines, they have gas pipelines that we've that's a lot of money. So it's on ground. That's earnings. That's revenue. That's a beta. So at what price do they value NNPC? That's really it. They have a lot of debt. So what are the numbers? When we see the numbers, we'll know. That's just the answer, really.
Okay, my own answer is it will depend on the audit valuation of the assets. The process for the audit and valuation of the assets will determine.
Gotcha.
But I think going to the market is a net positive in any way, shape, or form we look at it, because the market will force them to comply.
Honestly speaking, this going to the market thing is that they're trying to do an Aramco. They just need to just do what they are doing or do it better, Kelvin. Just do what they are doing better. This gas deal, if they carve out the gas side and they list the gas side, that's a money spinner. That's a money spinner, right? And then they talk something with LNG, combine those two companies. That's a global company right there. Then all those there are NIPIMs. That's on that company right there. The pipelines. That's on that company right there. I don't. Should they list NNPC as an entity? I would rather say break it down into like 8 companies. List those 8 companies. That's how I would go with it.
Can breaking it into 8 will be tough. To be tough.
I mean, there's pipelines. There's the NAPIMs, the technical side. There's the gas. Those are 3 major units right there. That the
actual bread and butter of NNPC is NEPL, exploration and production.
Okay, that's a list that one.
Yeah, the JV that
sell that one.
The JV that they own of on behalf of the government, the part of the JV they own for fields that are under joint venture. Under production sharing contract, NNPC doesn't get profit for signature and production threshold bonus that they get paid. In my view, Kalu, I am of the view that the government should comply with Section 65 of the PI and translate over a period of time to create a petroleum fiscal regime where maturing or expiring mining lease will go into new fiscal terms on incorporated joint venture company model, which is what NLNG runs on, where all the parties will be required, including the government, to contribute their own side of capex. There won't be anything like carry oil, subject to carry tax relief, Section 263 of the PI and all of that, to create more transparency and corporate governance, and also help to increase performance of those assets. Okay, so
Well,
tough decisions.
Yeah, we'll see. Like I don't see the numbers that they see, so they will know by then. This gentleman, Tobe Chuku, you've got the floor. Go for it, sir.
Yeah, thank you so much, sir. Thank you, Carlo. Thank you, Kelvin, for this space. I just wanted to quickly ask. So, considering the impending IPO and the unknown timeline, when do you think is feasible? Looking at this issue of feed gas now to NLNG and to other, private, companies. This issue of feed gas, obviously can be solved by tapping into the gas in, other regions.
I like the way you're just casually saying it can be solved by tapping into the gas of other regions.
Yeah, because I was listening and I was getting the info that even to have a gas well, that the government will have to be involved. So, if we are waiting for the IPO before this progress, or do you think that such things, like what's the timeline for the development of the gas infrastructure in the Southeast, in your opinion? What's the timeline? Because this issue of feed gas now can be solved by this pipeline that goes into the Southeast,
My brother, have you been on this space?
No, I came in when you were, maybe the third, maybe not long ago. But I'm very interested in.
We've gone through this twice now.
Oh, sorry about that.
I'll just summarize. So if you check a map, if you check Carlo's handle, you see a map that he posted on the diagram for gas already existing and planned proposed pipelines across Nigeria. And we've talked about the fact that a lot of the gas goes away from either the Niger Delta or the Southeast, goes to other regions, coastal, the Southwest, horizontal, proposed vertical plants. So AKK is simply aggregating gas from the South and Southeast, feed to the confluence center in Ajaokuta and Kogi State, and then take on the other leg from Obitari through Benin to Ajaokuta, because Edo shares a common boundary in Edo North, Auchi, with Ajaokuta in Kogi State, and take it to Gwagwalada in Abuja, Zaria in Kaduna, Kano, Funtua, And if you check that, on a dotted red line that goes from Enugu on the right, goes to Biu, it goes to Makurdi in Benue State, then it goes to Biu in Nigeria and Borno State, and Borno goes to Bauchi, So we talked about the fact also that the excessive focus on gas cutting when you trap, the gas you trap when you drill crude oil, which is what they call associated gas, which is anywhere around 85% of the gas that is used in Nigeria.
Yeah, Mr. Kelvin, sorry.
It placed the limits. On how much gas that is available. So there's one problem. The first problem is that the legal authority to build transmission pipeline for gas sits with the federal government of Nigeria, not the states.
Okay.
Unless the federal government decide to build a pipeline in a region, states cannot do anything about it. Number one. Number two, for you to get the gas to feed those pipes when it's built is problem number two.
Yeah.
Can you?
Yeah, I can hear you. So why I ask this question is because I represent a company that holds an active authorization to export gas and import gas. Export gas from the US and import from other international sources.
What kind of gas?
LNG, natural gas, yes.
You have to go and source for it now.
No. Why I'm saying this is because I've tried, reaching out to LNG. We have gone very far, in terms of that side. And I noticed that this now that is making sense that even the NLNG, they don't have enough.
Let me give you an idea of how bad their problems are. So in 2020, during COVID, there's a Nigerian company called Calabaris. It's run by a chap, Igo Sanomi, that used to be active in Nigeria before he relocated to Europe. He pre-sold 19 cargoes of LNG to Glencore and Vitol, value of about $380 million US. And then he, of course, did forward sale with NLNG for that 19 cargoes he pre-sold. And so he pre-sold it with a margin, of course, and on the hope that NLNG was going to deliver based on the contract that has been signed for offtake. NLNG didn't deliver because of force majeure from issues, COVID, pipe finalization, shortage of feedstock, and that led them to default. And Vitol and Glencore took Calabaris to court in Europe, not in Nigeria. Calabaris in turn took NLNG to court. 2021, they got a judgment in their favor. NLNG appealed. Last year, NLNG lost the appeal at the court in London, an appeal court in London. And unless they have an insurance that was paid for against legal liabilities that goes over the head of force majeures, they have to put up the money from whatever way they want to put it up from, maybe the profits due to the partners, joint venture partners in 2024 financial year. And they'll take a hit of about nearly $400 million. So that's how deep their problems are, from the fact that they don't have enough feedstock to separate and then process into LNG and all the C plus gas family of gases. That's how deep their problems are. So I wish you good luck. But I don't have solution to your problem.
No, we don't have issues actually. We have strong Mexican customers that we are pushing gas to, not liquefied, So we don't need a liquefaction facility. What I'm getting from this is that I shouldn't even venture as much as I was trying to into LNG, because even the feed gas is a shortage.
Their problem is the feed gas, my brother. Their problem is the feed gas. Not even. The problem is the feed gas. That's the problem on the table.
All right. Let's get...
Thank you so much.
Thanks, Toby. Ben, you're up. Ben, how you doing? Thank you so much. Kevin, we'll be nearly going to clock 3 hours. I thank you so much for just hanging out here, take the questions from folks that are asking. I'll soon let you go. But Ben, you've got the floor. Please go ahead.
Yeah, good evening, everyone. Good evening, Kelvin. I must say, this has been a very enlightening one. Kelvin is always coming heavy. Kelvin is always coming with a lot of information that you can't even find in that you can't find it anywhere. So that's been really good. So I just have a couple of questions and some comments too on the future structure of NNPC. Although before that, let me just say something about the question about the states. Well, Kevin, what would you say about the states going into a partnership with a private entity, whether it's through a trust, then from the trust they go into some type of joint venture with the private entity, and then get permission. And then get permission from the feds to just connect a pipeline within their states that will tap into one major pipeline.
We've talked around this, I think, twice. So he was saying that it's not possible that they should go through FEC and all that.
I'm not removing the fact that you have to get permission from, the federal government, But what I'm saying is the states can still secure that private investments first together and then go as a private entity just like a private entity will come in to say, oh, we want to invest in a pipeline, or want to invest in developing a pipeline system. Like, want to partner with NNPC, even if NNPC will still, because they always want to have their 100% control of the pipeline, but still, in a way, the state passing through a private vehicle to make it happen for them. I feel like there's a route there that they can follow. I just wanted to hear your thoughts on that before I speak on NNPC.
Ben, I think they have to work on their model of closed loop, change to open access, also work on the network access codes. But more importantly, I don't think NGIC, NGML should be 100% responsible for pipeline infrastructure in Nigeria. I don't think so.
I also don't think so.
But the reality today is that's what we have today. That's the reality today.
They are supposed to actually just take a step back in the pipeline area and just provide security, hold some sort of minority stake.
NNPC is not in charge of providing security for pipelines. And I was also in a meeting earlier this past week where.
So who is the federal government?
Yeah, so we're talking about this issue about fiscalization, of the entire oil and gas acreage in Nigeria, and hydrocarbon accounting framework, connecting your spreadsheets for hydrocarbon accounting to first get Section 69 of the PI activated, build a GIS for all the onshore acreages, build a GIS. Because the government, beyond what NAPIMS give them, delayed data, to 48-hour delayed data that they give them on daily output. NAPIMS should not be telling the presidency or the Ministry of Finance or CBN or FRS how much crude oil and gas came to subsurface on a daily basis. Gas is almost constant because, you get 6,000 SCOF, standard cubic feet per barrel of crude. But the amount of crude oil that comes subsurface, NAPIMS should not be telling them that. They should have an independent structure where you can develop a GIS, deploy a SCADA, you meter the wellheads, you pay the about 5 to 6 companies globally that manufacture wellhead meters a $2 to $3 fee per barrel in exchange for their lease.
There's so much stealing going on. They won't want to meter it.
Exactly. You put pressure and temperature sensors on the pipes for gathering, also on the pipes for transmission, and then the SCADA connects it to real-time feed in the offices of the Minister of Finance, the Permanent Secretary, of the Board,
that's perfect.
CBN, FRS, show them real-time. So if 1.7 million barrels plus condensate comes to subsurface daily, NAPIMS should not be the one writing memo or report and telling them 1.7K. They will see it live. That's how it's done in Saudi Arabia, in Qatar, and other major producing countries around the world. In Malaysia, that's how it's done. You shouldn't be the one telling them what MBS today, MBS. If you ask MBS, they will not be able to tell you, they will not be able to give you any data on the oil and gas sector in Nigeria. Because they are also relying on NNPC and the regulator to give them data.
Yes, exactly.
Right.
So Kevin, I think I'm clear on that. I wanted to ask, has there been, when we talk about first oil, I want to be very specific on what first oil is. First oil is when you've done your initial exploration and then you started commercial production. So as of the first time you start commercial production, that is when you've achieved first oil. Has there been any of the frontier basins, has anybody anywhere in any of those basins reached first oil since 2019 or 2017?
Ben, if they've reached first oil, we'll see it on the news now. It will be recurring, like it will be going. Ben, did you start?
So what's happening to all the money? What's happening to all the money that they've invested in it now?
Ben, is this a question for me or is this a question for you? Or is it a question for? I don't know who you're asking the question.
These are very tough questions.
I'm not the right person to ask the question. I'm not the right person to ask the question. Earlier when we started this space, I was talking about the fact that, listen, there are different phases in this thing. Okay? And I said, the share of the profit oil that Frontier Basin Exploration Fund gets, which is run by Frontier Investment Services, FIS, it's a subsidiary of NNPC. Okay? NSEV, which is a subsidiary of NNPC, does seismic and geological surveys on behalf of the group. So they're supposed to be like one of the EPC contractors to any frontier, this thing you're doing. You go in, you do your seismic, there's any chance that you have hydrocarbon deposits, you go in and you commission your, what they call your exploratory drilling for exploratory wells. And I mentioned earlier, I said, from that exploratory drilling, you should be able to get your log, your drilling log for the well, which is what they call well log. You should be able to get proper seismic data, and you should also be able to collect samples from that exploratory drilling. Now, I just oppose this with the fact that if Shell, SNEPCO, because SPDC has sold off to Renaissance, their onshore business. SNEPCO is the offshore business for Shell now in Nigeria. If SNEPCO, before even doing exploratory drilling, they've been able to come out and tell you that, listen, we're doing Bonga North, which is part of the Bonga family, Bonga Main, Bonga Southwest, Bonga North, and Bonga Northwest. And based on the seismic we have on 8 wells for oil, 8 wells for water, based on the seismic data we have of exploration that is 4,000 to 6,000 meters below surface level, we can tell you accurately that our estimated ultimate recovery from calculating our recovery factor is 300 million barrels over 10 years. If before doing exploratory drilling, they've been able to give you that data and tell you that, okay, based on our analysis, right, on the fiscal terms and everything, we've been able to calculate that our hurdle rate for our internal rate of return is higher than the market average. Are you telling me that the company that was giving $300 million for coal mining in Bauchi and Gombe cannot provide you with information that will lead to them telling you that this is our recovery factor and this is how much of estimated ultimate recovery we're expecting, considering that they've started exploratory drilling? So I'm trying to draw parallels for you to see a mismatch and see that someone is lying.
Huge one.
Someone
is lying. Someone is
not
definitely
done
lying.
Exploratory drilling of any well. 8 wells planned for Bonga North. I think they gave either Saipem or SLB. They've not done exploratory drilling. But they've
already commissioned FID. Wow, okay, now
they've commissioned FID, but they've been able to give you the estimated ultimate recovery and recovery factor and calculate hurdle rates. But the one where they say they've done exploratory drilling, they've not come out with any number.
It's a lie. I get the full picture. It's a big lie. It's not even, doesn't make any sense. So my last question will be on OB3. When they commissioned the OB3, that's from Obia 4 to Obicum and then ending up in Edo State, Uben. The pipeline was initially awarded to Nest Oil and Oilserve. Nest Oil had a part to play, like a section to handle. Oilserve had a section to handle. I think Oilserve has gone, they've gone so far with their own parts. But I think when Nest Oil got to the River Niger, there was a huge problem there. They tried to do horizontal directional drilling, I think about 1.9 kilometers to cross the Niger River, and they failed. Now, I heard again that sometime can't really remember, I think before COVID, shortly before COVID, they gave it to a Chinese company, a division, a subsidiary of Sinopec, CPPEC. I think so. CPP is a subsidiary of Sinopec, or CNPC. Sorry, it's a subsidiary of CNPC. They also tried, and I think it ran into COVID time, and I've not heard anything so far. So I don't know. Have you heard anything on that? Is there any updates on that now? What's going on there? Because I believe that's the key area for AKK, for the success of AKK. That pipeline is supposed to feed AKK.
Nothing has changed. That's where they are.
Wow.
Kevin, someone asked me on DM that the pipeline between Seplat and NNPC NGIC, is that what we're talking about? It says the gas pipeline between Seplat and NNPC NGIC. Is that what we guys are talking about? Is that the OB3?
So
No. OB3 is another gas pipeline from River State.
Okay.
From River State to Edo.
So the River State to Edo, River State is feeding, yeah. Edo is also feeding. So what Ben is talking about is the connection from a section of OB3 down to the River Niger crossing to connect the pipe that is also feeding from Obigbo in River State through Maya down to Enugu to cross the River Niger and join the other side of it. That's what Ben is talking about.
Gotcha. Okay, interesting. All right.
If they're not able to solve that River Niger issue, it will negatively affect AKK. So even if AKK is finished.
Ben, my real thoughts on it, I would prefer not to discuss it.
Okay. Yeah, I understand.
Yeah.
Interesting. We can't cross River Niger. Okay, interesting. Vese, you are back. Did you have something to add? Because we're going to round up the... Did you have something to add? Go for it.
Yes. Sorry, I dropped off abruptly. Yes, I wanted to ask two more questions.
Two.
Just two. Yes, when Kelvin has been giving his submission, I think when he did the juxtaposed between Nigeria and Qatar as regards our gas capabilities, and he made like a comment that like Nigeria doesn't have like a plan, doesn't have a strategy for gas. All that we've been doing is based on associated gas and all that, understand that. So like the question now is like, does that mean that a new gas master plan is something that we can look forward to? Like a brand new gas master plan, like that can sort of like take into cognizance like regions in the southeast and the south, such that gas is not just leaving those places, but those can also be centers of industry and lots of power production. First question. The second question is around, like I said, I'm from Delta, DSC, the Delta Steel Company and all that. Now, from some sort of research and all that, it is, I think they say it's feasible to drag, like if you pipe gas to that certain location, it can sort of like jumpstart or incentivize the feasibility of steel production in that region once again. So I don't know, what are if that has come within your purview in, this petrochemical, oil and gas ecosystem conversations. Thank you.
So earlier I was talking about the fact that the North has more gas than oil. That's why you see that major operators are running away from it.
It was a surprise to me.
They want fields that has more oil than gas. And the fact that there's no coordinated gas strategy. Now, I like that map. I think that map that Kalu posted, has guided our conversations on pipeline infrastructure throughout space tonight. I really love that map. That map tells you the whole story. I remember someone came on, I don't know if it was Adisa or TS that came on earlier and was talking about the fact that if you look at the gas pipeline that has consistent red lines on the coastal side from the south to the southwest, when I say Nigeria does not have a very comprehensive gas master plan, what I mean is this. I'll pick an example with Qatar, and I said this earlier. Qatar does not produce more than 1.2 million barrels of crude per day, net of condensates. He left OPEC in 2019. One of the reasons was because, Qatar believe OPEC is Saudi's alter ego. And Qatar and Saudi Arabia are not exactly the best of friends when it comes to alignment politically. For religious reasons also, the Qataris are Shiites, Muslims, Saudis are Sunni Muslims. So they have a major ideological difference when it comes to religion. One side believes they're majority, one side majority believes the other side is minority. But OPEC basically dictates what happens Saudi dictates what happens in Qatar and OPEC. In 2019, you saw Qatar leave. 2023, I think, you saw Angola leave. 2019 also, Indonesia left OPEC. Indonesia does not do more than 1 million barrels per day. Qatar does not do more than 1.2. So I want you to do some small numbers. Now, we did this earlier. I just want to repeat it for you. Every barrel of crude gives you 6,000 standard cubic feet of gas. Okay? So if you do